Hello future CAs. This video may be only just 3 hours, but it took me days and days of effort and years of experience to do this, guys. Yes, welcome to Gen Z Law Marathon, and let me tell you how important this is. Let me start off by telling you, ability to recollect in exam depends on how many times you are able to revise the syllabus, guys. More revisions means easily you can recollect, and revisions, first time revision, second time revision, third time revision, how quickly are you able to revise? Meaning the biggest challenge we have in our exams is before law exam, in that 1.5 days, how can I revise the entire syllabus? And with that, let me welcome you to Gen Z Marathon for CA Inter Law for whether May, September 2025 and even applicable for Jan 2026. I have freshly recorded this now, guys. Now let me tell you small introduction about this before you go and experience one of the fastest revisions that you have for CA Inter Law in whole of YouTube and whole of the country. I mean, find me something that is much faster than this, covering the entire syllabus, guys. I will honestly surrender. If you find something, put it in the comments. I will go and learn from that. I'm a person like that who will learn if there's something better. Okay, that's why I'm here now. Now, if you look at my CA Inter Law classes, guys, my CA Inter Law class, I have 4 types of classes. One is the regular class of 100 hours. The first time learning students will watch that. Next is the wow of 50 hours of our CA Inter Law, like exam oriented. Sir, I don't have much time, but I need to study in 40-50 hours. Yes, that's what we have. Next is our marathon of 16 hours. Marathon of 16 hours, guys, which is anyway available on YouTube. If you can afford 16 hours, go watch that marathon. One of the best marathons on YouTube. We have close to 1.5 lakh views on that, guys. So, and then now we are now coming up with something called Gen Z Marathon. Revising, this is the Gen Z Marathon video. Revising full syllabus in just 3 hours. The previous 3 classes, which is there over here, the previous 3 classes, we use our regular material. For this, I have made something called Gen Z notes. In regular class, I keep talking about Gen Z notes, and using this Gen Z notes only, we have this Gen Z marathon for 3 hours. How this marathon is going to be, guys, basically, and when it's going to help you, in that 1.5 days before the exam, you cannot watch regular, you cannot watch WoW, you can't even watch 16 hours marathon because you have only 16 hours to study. So, sir, in 3 hours, can you revise the whole syllabus? Yes, I recorded all this in just a stretch of 1 to 2 days. So, this marathon, after this intro, will start off with foreign company. I will be starting off in reverse. Foreign company, then I will come to auditors, then come to books of accounts, and I will end with preliminary. Then move on to other laws and do all the other laws over there. Timestamps will be available in the description, and the material that I will be using, this Gen Z material also is available in the description, guys. So go enjoy the marathon. Of course, sir, are we covering the entire syllabus? Yes, 95% of the full syllabus will be covered. I will be revising it quickly. So let me know in the comments, guys. It's huge efforts. What you see is 3 hours, but there is so many hours, days of effort that went into making this. So if you are someone who watched the entire 3 hours, let me know in the comments how it was, because I would like to hear from you and keep making changes as we keep going forward. But this is one of the best revisions I've done in 3 hours, guys. Enjoy. All the very best. Hi, guys. We are going to now revise quickly foreign company using our Gen Z notes. Just one page, guys. First, foreign company. What is a foreign company? Defined in 2 subsection 42. What is 2 subsection 42 saying? A company which is mainly incorporated outside India but has a place of business in India either by itself or through electronic mode. So let me repeat again, guys. What's a foreign company? Key points to remember here is what? It is incorporated outside India. Incorporated where? Outside India. Place of business is in India either by itself or through an agent, physically or electronic mode. Then one more point they will. So this foreign company has to follow only this chapter. They have to follow only this chapter. But if my foreign company 50% or more of the paid up share capital, 50% or more of the paid up share capital, equity and preference together is held by people in India, is held by whom, guys? People in India. If it's held by people in India, then what will happen, guys? Then they have to follow all the provisions of companies act. They have to follow the full provisions. That's what we have in the book here. So if you are a foreign company as per this definition, then this chapter alone you follow, it's enough. But if you are a foreign company where 50% or more of the paid up share capital of equity and preference is held by one or more citizens in India or one or more companies in India, incorporated in India, or a combination of both, then they have to follow the full Companies Act. Are you following, guys? When it comes to foreign company, means a company incorporated outside India but having a place of business in India. What is important is having place of business in electronic mode. For that, in study mat they would have given list of what is covered in electronic mode. I don't have time to read all of that, sir. So I will just highlight key words from there which comes in electronic mode. When I see transactions like digital supply, online services, deposits, web-based telemarketing, then data communication service like internet if you get from abroad, if you, let's say you get it from Elon Musk, or some more points, financial settlement, advisory services online, all these if you're getting electronic mode, telemedicine, email marketing, then any other type of marketing or cloud, WhatsApp messages, international calls, all those will be covered under what, guys? Electronic mode. Are you following, guys? Understood what is electronic mode? So here in section 379 2 subsection 42, what we saw, what is a foreign company and applicability of this chapter. First, basic applicability, then whole act applicability. Sir, I am not incorporated outside India, I am incorporated in US and my equity is held by outside, then this chapter itself is not applicable for you. Next, once you become a foreign company, what happens next, sir? Next section will come. Once you establish in India, within 30 days, within how many days, guys? Within 30 days of establishment, you have to do one thing. You have to file something called FC1 to ROC. FC1. And then if there is any modification to details, change of address, etc., you have to file FC2 to ROC within 30 days modification. Where is our registrar for foreign company? New Delhi. Sir, in this attachment, what all I will file, sir? Attachments in form FC1, some key points over here, details of MOA, OA, charter of company, which country you are coming, that company's charter, then some basic details, which address you are going to be there in India, what is your address abroad also, I want Indian and abroad address, director order KYC, passport, don't ask for Aadhaar guys, if it's a foreign director, he won't have Aadhaar, so their passport and all those details. Then amendment is, you should also get permission of RBI and FEMA approval to start the foreign company. Then because it's a foreign company, we need to have someone called authorized person who will represent the foreign company, his details, and if you came in the past and left India in the past, details of previously opening and closing in India. So these kind of attachments will be given in section 380 within 30 days in form FC1. Changes for all these details like address, etc., FC2 you will give it. Are you following, guys? Clear? Next, 381, I am discussing key points, talks about accounts of foreign company can be maintained on every calendar year basis. You can maintain, because it's a foreign company, you can't expect them to maintain in financial year basis. Over here, you have to do filing. There are two filings that is important. Sir, if it's an annual return, I will file within 60 days from end of financial year. But if it's going to be filing of accounts, I will file within 6 months to ROC from end of financial year. Both are from end of financial year because they don't keep AGM here. That form is FC3. Sir, what is important here? When you are filing the accounts, it has a few attachments that you have to give. I have to give a few attachments. Whichever notes you have, refer to that. What are the attachments? Related party transactions, repatriation of profits, statement of transfer of funds. These three attachments, transfer of funds, repatriation of profits, and related party transactions will be filed. This is section 381. Sir, what is 382 saying? Nothing. Wherever you are doing business in India, display the name and also display name of the company and country from which you came. Germany, write that country name. Are you following, guys? And 382 also says all the letterheads that you use of the company should have details of name and where it came from. Are you following, guys? Next 383, notice. If ROC has to give a notice to a foreign company, it is sufficient if the notice is given to the person under 380. Who is the person under 380? We saw that is authorized person or authorized representative. Notice kurta, it's equal to giving the notice to the foreign company. Next, or you can leave it at the address given. They would have given one address, they came to India, so leave it at that address. Next, sir, this I'm discussing only key provisions, okay, but not the dabba provisions and all. Now, sir, this chapter I didn't follow means what is the penalty? Important to note, generally penalty is 500 rupees per day or 1000 rupees per day. For foreign company, because everything is in dollars, penalty is 50,000 rupees per day is my penalty. Are you following, guys? All of you with me? Hello? Clear, guys? Next. Yeah. Next they are saying, section number 393, last section. If a foreign company is not registered by filing FC1, if I am not getting registered by filing FC1, that means you have not followed the law. Then what they are saying, like Partnership Act old one, all the contracts entered are valid. But how it is valid? Third party can sue the foreign company for contracts, but company cannot sue the third party. Are you following, guys? And also they will not have the benefit of set off benefit will be not available. Set off benefit will not be available, guys. You will add this in your GenZ notes. Okay, here and there, wherever I feel something, I will just quickly add it over there. Set off provision also will not be. That means setting off the debtors. I have to pay me, you have to pay me. So I can't set off. I have to pay you, you have to pay me. I can't set off that. Are you following, guys? So you can't sue third party can sue you. These are the key provisions in foreign company. Now come to prospectus related. Within foreign company, there are some prospectus related points which are relevant for us. Sir, what prospectus? If foreign company is issuing prospectus in India, then first it has to be dated and signed. No exception over there. You have to date and sign it. Mandatory to issue, you have to mandatorily issue it with dating and signing. But in some cases, prospectus is not needed for a foreign company. What are the three exceptions? One is underwriting. No need to give prospectus. Existing members, existing debenture holders, same people I'm giving, sir, no need to give it. And lastly, terms and conditions are the same and the securities are already listed on the recognized stock exchange. I am just doing a further issue on the same terms and condition, listed company, SEBI guidelines, no need to issue prospectus. Are you following, guys? Underwriting, existing members, same issue. Okay, are you all with me, guys? Next, expert consent is needed. This expert provision is just like prospectus chapter. Simple. If expert gave consent, he is liable. If he wants not to be liable, he has to withdraw his consent. If his consent is given without his knowledge, he has to prove he never had the knowledge. And then without his knowledge, consent is given. On becoming aware, he has to withdraw consent and give a public notice. Simple. Same in prospectus. So not liable if it is withdrawn before issue, or if public notice is given after knowledge. Are you following? I just gave key points, but simple, common sense. If I signed, I am liable. If I didn't know my sign is there, I have to prove I didn't sign it. That's it. If you don't want your sign to be there, withdraw the consent. Prospectus already issued, give public announcement and then withdraw. Are you following, guys? This is for expert consent. Same as prospectus chapter. Last one, if you want to issue a prospectus, you need to first file it with registrar. When you are filing with registrar, some points have to be attached. This can be a separate question. 5 points they have to attach to prospectus when you file to ROC. First, the expert consent has to be attached. Next, appointment copy of managing director or manager of the company. Are you following, guys? That should also be given. Important. Any material contracts in last 2 years, are your expert consent? No, okay, that certificate, appointment letter, then material contracts. What is material? Depends, subjective. Then copy of underwriting, if any. Illana, I don't have to give it. Then copy of power of attorney. Who is this power of attorney? The person who is signing on behalf of director. This guy is not authorized representative. Understand? Authorized representative is authorized representative for foreign company in India. Power of attorney is the power of attorney for director who's signing on behalf of director for this prospectus. So copy of POA if signed with agents. Are you following, guys? And they're also saying this prospectus along with the above attachment, you give the above attachment along with that, what they are saying, it should be certified by chairman of the company. Chairman of company should certify, and it's not like books of accounts or all. Here it should be certified by chairman of the company and 2 directors authorized by the board of directors. Are you following, guys? So these are prospectus related points in foreign company, and above is the other foreign company that we saw. Most of the questions they will be asking in this chapter. What is a foreign company in Cape? Incorporated outside India, place of business in India in electronic or physical mode. And the other point, 50% or more, it becomes deemed Indian company, and electronic mode is important, guys. And then rest of the things will follow. Prospectus, I have covered everything in detail. Clear, guys? In 12 minutes we revised fully foreign company. Are you able to understand, guys? Okay, fine. That's about foreign company. Yeah. So let's start revising audit and auditors with our GenZ notes in less than 10 minutes. I gave you a few minutes time. We finished auditors today and yesterday. You went through the notes. Now we will revise together. Okay, we will start off in the same order in which the class was taken for you, guys. 142 talks about remuneration of auditor. Simple. For statutory audit fee could be inclusive or exclusive of travel, food and other expenses. Shareholder will decide this by passing a ordinary resolution. First auditor, board of director will decide the remuneration. That's all to remember for exam from section 142. Next we went to 145. 145 talks about auditor has to sign the audit report. If it's a firm, any partner can sign, and he will give his observations and reservations in the report, can be read in the AGM. Important points, he will read it. Next we saw 146. Auditor he shall attend the AGM, and he also has right to speak and be heard in the AGM. Right to speak, he will speak. Heard means if somebody tells a question, he can answer. If it's not possible, authorized representative, instead of him, some other CA will go and attend. This is 146. Then we went to 144. In 144 we saw one set of people, A, cannot provide the services to another set, group B, if you are the statutory auditor. So 144, auditor not to render certain services. So who is that one set of people? If you are the auditor, that means if I am the auditor, myself and my parent, subsidiary, associate and some other entity in which my firm has significant influence or control, and any other trademark or brand name of my firm, we can't provide services under 144 to the company, then company is holding and company is subsidiary. What are the services? We have a mnemonic, this I cube, I am dupe. So basically investment advisory, investment banking, internal audit. AS, actuarial services. MS, management services. DS, design and implementation of financial information system. Outsource financial services. Other services. BS, bookkeeping services. Are you following, guys? Clear. Then we went to next section, 141, eligibility. Who is eligible? This we split the section into two parts: qualification, disqualification. Under qualification we have only one concept. Under disqualification we have four parts. Under qualification, who can be an auditor? CA as per ICA Act, or a firm where majority of CAs are practicing in India and the firm includes LLP. Then disqualification, the first part out of the four parts we saw. In first, with the company, and the company is holding, company is subsidiary of the holding, and very important, subsidiary of the associate. With this group you cannot have business relationship, but what is allowed is professional service as per ICA Act, like tax audit, GST audit, and commercial transactions at arm's length price, it's allowed. Examples: hotel, airline, telecom, etc. This was the first part. Second, then next we saw employee and officer of the company and their employees and partners. So employee, officer, their employee and partner not allowed. Then any person who is a director in the company can't be the auditor, any person whose relative is the director or KMP in the company, then you cannot be the auditor of the company. Body corporate, not allowed. LLP is allowed. Okay, fine. Next one. Third part, we saw that limits for every partner, individual and relative. So individual's partner, individual's relative with the whole group. Here, who's the whole group? First, let's look at the group. Company, company's holding, company's subsidiary, company's associate, and subsidiary of holding. With this entire group, guarantee and security is maximum 1 lakh, indebtedness maximum 5 lakhs, security not for individual and partner, only for relative up to 1 lakh of face value. If it crosses, rectify within 60 days. Corrective action will be taken. Now we spoke about relative. Relative is defined in 2 subsection 77. In that we saw individual, first your close relatives, parents, kids, brother, sister and spouse. Then everywhere stepfather, stepmother, everything will come. Brother, sister, step will not come in 2 places. You can't have step spouse, so step is no. That is one, logically not possible. Second is stepdaughter is not included. This you will remember, I don't have to teach you again also. And son-in-law and daughter-in-law. Next, then we move on to 4th disqualification. If you are doing the following services, you can't be an auditor. 144 services, auditor not to render these services. No COP. If you have COP, if you don't have COP, you can't be an auditor. That means you are in industry. Maximum limit is 20, but this does not include 1% company, dormant, small company, private less than 100 crores, and convicted for fraud means 10 years, not possible. Are you able to recollect, guys? Then we went to 140. 140 talks about resignation and removal. Resignation is by myself. Removal, 3 cases. I want you all to be loud, guys. Resignation. Once you resign, intimate company ROC within 30 days. Inform edit 3. If it's government company, intimate even C&AG within the same 30 days. Next, board is removing. Board wants to remove you. They will first pass board resolution and intimate central government within 30 days. Once the central government order comes, within the next 60 days, you have to pass a special resolution and give opportunity of being heard. That's it. Resignation over, removal by board over. Next, removal by tribunal. Tribunal can simply pass an order. If order is passed, then auditor once removed because of fraud cannot be audited for next 5 years. But in this, tribunal can do it by themselves or an application given by somebody else. But if central government gives an application to tribunal, then they have to give the order itself within 15 days. Are you following, guys? Okay. Next, removal by shareholders. Removal by shareholders. This is 140 right along with section 115. Special notice. A special notice will be given. Then if special notice is given, then in general meeting, shareholder can pass special resolution to remove the auditor by giving opportunity of being heard. This you will read along with special notice. Special notice, just to revise the provisions, it's 1% of paid up share capital or 5 lakhs of paid up share capital, whichever is less. In meeting chapter you will see that. Next, go to 139, 5% of total voting power. Yeah, 1% of voting power and 5 lakhs. Anyway, we are not discussing this part, so I will just leave all of this because this comes in special notice. Meetings, GenZ notes, I will discuss special notice. Auditors, you revise, that's it. Leave that part. Come to 139, appointment of auditors. We saw this also yesterday. In simple, first auditor and subsequent auditor for each government and non-government. Simple. First auditor for other company within, board will appoint within 30 days. I'll just connect here so you can see. Board appoints within 30 days. If board fails, shareholder will appoint within the next 60 days. But actually you should write 90 days from incorporation. So that 90 includes 30 days of board. Okay, next, government company. C&AG will be within the first 60 days. After that, same as above. Board within the next 30 days. If board fails, shareholder within the next 60 days. Are you able to follow, guys? Why actually it's 30 plus 60? Both put together is 90. To have an EGM, you need 90 days in section 100. Okay. Next, subsequent auditor, other company and government company. For other company, once you appoint, he has one term for 5 years and every year we will ratify. That means from end of first AGM to end of 6th AGM, it keeps going on. For government company, in simple, forget the complications, he will be appointed every AGM. AGM I will keep appointing every year, but the provision says within 180 days from the commencement of financial year, and he will hold office till the end of AGM of that financial year. Are you all able to follow, guys? Are you able to recollect this? Okay. Then if there is a casual vacancy, usually if there's casual vacancy, board will fill within. But if the casual vacancy is because of resignation, then shareholders will fill within 3 months. Why 3 months? Why 3 months to fill? Because 3 months is 90 days. 90 days you need time to keep AGM. Okay. Next, the government. If it's a government company, C&AG will appoint within 30 days. If they fail, board within the next 30 days. What about government company resignation? Still same. Resignation split comes only for casual vacancy of other companies. For government company, only one provision. No members in 3 months. Government company resigned. C&AG 30 days. If they fail, board within next 30 days. Total reconstruction of firm. That means all the partners leaving, new partners coming. Is this casual vacancy? Yes. Not appointing the auditor itself. Is this casual vacancy? No. Not appointing is not equal to casual vacancy. Then in the same section we saw rotation. Rotation is basically individual will be for 1 term of 5 years, firm will be for 2 terms of 5 years, total is 10 years. After your duration gets over, you will not be auditor for next 5 years is the cooling off period. For whom it's applicable? Not for all companies, only for listed companies or unlisted public company with more than or equal to 10 crores of paid up share capital, or unlisted private company more than or equal to 50 crores of paid up share capital. Borrowings or debt more than or equal to 50 crores for unlisted public or unlisted private. Not allowed, meaning within this cooling period you can't try to find loopholes like using brand name or same network firm or common partners or old partner and new firm. These are not allowed. We discussed detailed in class with logic all of that. Okay. Members may propose. Members can also tell. Members of the company will tell the auditor that within your firm you please rotate the partners. Don't send the same face every year. I'm getting bored. Okay. Next, last section we saw, last important section 143 talks about rights and duties of the auditor. There is one set of points for rights. Duties has 4 sets. Under rights, what are the key points? He has right to inspect books of accounts under section 128 and books of holding subsidiary associate. Then he has right to get all information and explanation, right to visit the branch. Then 142, right to receive remuneration. 145, right to sign. And 146, not attend. It is right to speak at the meeting. No, sorry. This is right to get notice. 145 also right to speak. So right to sign, right to speak in AGM, and also right to receive notice for AGM. That is 146. Then duties, we saw there were 4 types of duties. One is enquiries made by auditor, fraud reporting, government, other general duties. Enquiries, 6 enquiries mandatory auditor has to do. Enquiries about whether personal expenses are charged to revenue, whether investments are sold at a loss, whether entries are just merely represented by book entries, whether shares are allotted for cash, loans and advance. 2 points, whether the loans and advance security is prejudicial to members and company, and loans and advance shown as deposits. This also we saw. Then next, fraud reporting, simple. If the auditor during his course identifies fraud more than or equal to 1 crore, then within 2 days intimate board and audit committee. Then they should reply within 45 days. Whether they reply or not, within the next 15 days you will inform central government. So they replied within 20 days itself. Then from that point, within the next 15 days you will intimate central government. Less than 1 crore, government is saying I don't care. So just 2 days you intimate board or audit committee. Next, for government company, third duty, simple. Once C&AG you file the report to C&AG, audit report is given to C&AG. Then within the next 60 days, if there is a need, C&AG can order for test audit or supplementary audit. Are you following, guys? Okay. Other reporting duties, some key points, list of points are there. Key ones. If branch auditor means you will rely on the work of other auditor following SA 600. Caro reporting mandatory. Then 133, accounting standards complaint or deviation you have to see. Then give report on adverse remarks. SA 700 series you follow their saying. Managerial remuneration, you give your comments. Is it computed properly? Then director's disqualification, just like auditor's disqualification, I have to check. And 125, IEPF. Is IEPF transfer done properly. Audit trail is the new amendment we have. And 123, declaration of dividend is correctly done or wrong. New point we saw here was the company cannot act as an intermediate to receive or transfer funds to an ultimate beneficiary. Are you able to revise, guys? 147 talks about penalty, important penalty. That's why it's even entered our GenZ notes. Auditor penalty. Generally, if you make a mistake in the provisions of Companies Act for audit chapter, 25,000 minimum, maximum 5 lakhs or 4 times remuneration, whichever is less. I am an auditor, I will do fraud and apply intentionally. If you do 1 year imprisonment, 50,000 to 25 lakhs, which is 8 times remuneration, whichever is less. Additional liability, unlimited civil and criminal liability. Unlimited means all the damages you have to pay, and arrested along with the partners will join you for criminal and civil, but partners will not come if they were not involved or they were not doing the fraud. It's not intentional by them, then criminal is exempt for them. This 147. Then everyone's favorite section 148, cost audit. In cost audit, key points, they classify into applicability into regulated sector and non-regulated sector. Regulated includes like petroleum, drug, electricity. Non-regulated tea, coffee, cement, defense, etc. Overall, for regulated, overall turnover should cross 50 crores in previous financial year and individually 25 crores. For non-regulated sector, overall should cross 100 crores, individual 35 crores or more. If yes, then the report will be, we'll come to that report. This cost audit not applicable for 3 people. SEZ, revenue from exports more than or equal to 75% and captive consumption, no need. Okay. Then appointment, he will be appointed within 6 months from the start of this financial year, that or 6 months from end of previous financial year. If audit committee is there, you will take their recommendation. Report within 6 months from end of financial year. That means appoint within 6 months from start of the year, report within 6 months from end of financial year. Once you give the report, you have to forward to central government within. How to remove him? Simply pass a board resolution. All the other provisions of penalty, disqualification applicable to an auditor is also applicable to a cost auditor and company secretary. That's about it, guys. Thank you. Hoping you understood. Yeah. Okay. Back to our GenZ notes. This time we are going to revise accounts of company. Let's target to do as soon as possible. Okay. What are the important points for exam? You might have spent 2 hours, 5 hours, 7 hours for studying this chapter. For exam, what to remember? Quickly we will revise together. Loudly, guys, I want you all to be very loud. Section 128 talks about accounts of companies should be maintained in accrual basis, double entry. Can shareholders inspect? No. And it should be true and fair view for every year. Where will the books of accounts be kept? Only at ROC. Can I keep it anywhere else in India? Yes, by passing a board resolution, intimate ROC in 7 days and file form AOC 5. What, can I keep books of accounts at foreign branch? Yes, if I have a foreign branch, books of accounts will be in the foreign location. Then you have to send summary returns on a quarterly basis to the registered office. Sometimes the director will ask for written request that should be given within 15 days. Who is responsible for maintaining books of accounts? We saw managing director, CFO and whole-time director in charge of finance. Then within books of accounts we saw, can the director inspect books of holding? Yes. Can the director appoint agent to inspect books of accounts of holding? Yes. Now same thing but with subsidiary. Can director inspect books of subsidiary? Yes, but company has to pass a board resolution. Can director appoint agent to inspect books of subsidiary? Yes, company has to pass a. Of course, inspection is only in business hours, so you can't expect night inspection. Okay. Next, within 128, we have some rule 3, which talks about electronic mode books are maintained. Now, what are the key points? Audit trail should be there. For that, backup should be there. Good backup, storage, legible form, printable and accessible. There should be some good security and firewall. It should be complete and unaltered. Okay. If you are altering, we should know who is altering, how they are altering. Very important. Server should always be in India, and for that you have to intimate ROC proof, IP address and name of service provider, address of service provider. If you are using any cloud service like Google Cloud, etc., details and address of the service provider. With this, we are done with section 120. 8. Then 129, if you look at section 129, which talks about preparation of financial statement. What is financial statements including? P&L, balance sheet, notes to accounts, cash flow statements, statement of changes in equity. This financial statement should be in true and fair view. 133, if there's any deviation from accounting standards, you have to disclose that deviation. Next, we also saw for cash flow statement, for some companies it's exempt. They don't have to prepare cash flow, which is 1% company, small company, dormant and startup, exempted to prepare cash flow statement. Next, if financial year is incorporated on 1st Jan or later of any year, then the financial year can end on the same financial year or next financial year. Mostly if this happens, you will choose the next financial year, you will save cost. Next, 129, okay, foreign subsidiary. If I have a foreign subsidiary for the purpose of consolidation, if you are doing consolidation, dollar will be converted to rupees, language should be in English, financial year is different. Now you will try to convert, if not get central government approval and do consolidation with different financial years. Okay. Next, we have a new concept called periodical FS in 129A. What to remember here? This is called limited review audit for any period which is not yet notified. Once you do this audit, inform ROC within 30 days. This is applicable for which company? Unlisted companies, not listed companies. Consolidation is mandatory, but some exceptions. Unlisted companies, one exception. Then ultimate holding, if they are doing consolidation, if H is doing consolidation, then S1 need not do consolidation unless H is in foreign country. You have intimated subsidiary in writing and they have not given any objection, then don't have to do consolidation. Next, 138 talks about internal audit. In internal audit, who can do it, guys? I want you to be loud. Who can do it? Anyone. Then that report will be given to management, appointed also by management. Applicability for listed companies, then unlisted public company limit is 200, 100, 50, 25. 200 is turnover, 100 is borrowings, 50 is paid up share capital, 25 deposits. For borrowings and deposits, it's not previous year, it's any time in the previous year. For private companies, same limits, but they have only 200 and 100. Are you following, guys? Then 133 is nothing, accounting standards. Then 130 talks about very simple, any person or statutory authority, SEBI, central government, RBI, if they feel something is wrong in a company, they will intimate tribunal. If tribunal feels company is operated by fraud or mismanagement, then they will reopen books for the last 8 years. Okay. Next, 131 is similar, voluntary reopening of books of accounts. Here, if the company wants to reopen board's report or financial statements, then they will pass a board resolution and apply to tribunal NCLT within 14 days. Tribunal will take its own time, get representation from 3 main people, central government, income tax department and original auditor, and they will pass one order. Once they pass the order, within 30 days you will intimate ROC by filing the revised financial statements and board's report. Can you keep revising whenever you want? No, only once in a year, and maximum you can do for last 3 financial years. 3 years over now you can't do revision, you have to apply to central government, different procedure, not in syllabus. 134 talks about signing off financial statements and board's report. Who will sign financial statement? Chairperson or 2 directors. One of them shall be a managing director, and CEO, CFO and CS if applicable, if they are appointed, that means applicable. Next, board's report, we saw other contents has lot of points like dividend declaration, related party transaction, loans, holding subsidiary details, CSR details, dividend details, risk, environment details, all of that. In that, key point was, if you are a listed or a public company with a paid up share capital of more than 25 crores, you have to do a self-evaluation, how I performed. And one more key point in that is DRS, Director's Responsibility Statement. Points are very key here. In that, first, accounting standards should be followed. If there is a deviation, disclose. Accounting policies should be followed consistently. There should be sufficient care for safeguarding of assets, then safeguarding of accounting records and detection of fraud. going concern should be taken care, laws and regulation should be followed. If you are a listed company, additionally, internal financial controls. Are you able to tell without seeing, or at least by seeing, are you able to recollect, guys? For exam, what are the points? Beyond this, they can't ask. Next, 132, NFRA, quickly. NFRA head office is in Delhi. What they will do, they will prepare accounting standards, auditing standards, and oversee quality of professionals. They will report to two House of Parliament. The committee includes 3 full-time and 9 part-time members. In that full-time, there is one chairman also. If any disciplinary action is taken, what is the penalty? For individual, 1 lakh or 5 times the fees, whichever is higher. For firm, 5 lakhs or 10 times or fees, whichever is higher. If a professional misconduct is noticed, they will be debarred from being a member for 6 months to 10 years. Name will be debarred. Then we saw 136, 137. 136 is before AGM, 137 is after AGM. 136 before AGM. 21 days before AGM, you have to circulate copies of FS and audit report to the members. If you want less than 21 days, yes, 95% of members have to agree. Same as section 101 notice. Electronic mode. This circulation should not happen physically. In electronic mode, mandatory for listed companies and public companies whose net worth is more than 1 crore and turnover is more than 10 crores. Why they use and here, where everywhere they use or? Because it's a mandatory condition. If you satisfy both, you have to circulate in electronic mode. Okay. 137. Once AGM is completed, you will file FS to ROC within 30 days in form AOC 4. If it's a 1% company, then they will file within 180 days from closure of financial year. Then in this, for some companies, they have an XBRL reporting, very important, which company listed and all their subsidiaries, paid up share capital of other companies more than 5 crores here, or turnover more than 100 crores, or companies following Ind AS. For some companies, XBRL not applicable. Bank, NBFC, insurance, housing finance. Once you follow XBRL, you have to follow for a lifetime, even if next year limits are not met. Then some more cases here. So what? We have to file 137 to ROC within 30 days from AGM. AGM held, normal scenario. AGM held, FS adopted, then file within 30 days. AGM held, FS not adopted, then you will file within 30 days something called provisional FS. Whenever you adopt it later, that time you file the final FS. Sir, AGM itself I didn't keep, sir. Could not keep AGM for whatever reason. No problem. File in 30 days from the date on which AGM should have been held and file with ROC as provisional FS. Whenever you keep the AGM and adopt the FS, that time you file final FS. This with section 137. Perfect. Then all sections are done. Then we went to CSR. Okay. Yeah, we went to CSR, guys. Okay. Are you following, guys? Last section 135, which is CSR. Follow. In CSR, let's revise one more time. CSR 135 is applicable for whom? It's applicable for whom? It's applicable for any company whose turnover is more than or equal to 1000 crores, net worth more than or equal to 500 crores, net profit more than or equal to 5 crores. How you have to spend, or how much you have to spend? 2% of average net profit of last 3 years should be spent. If I am loss making company, will I spend? No. Even if turnover is crossing limits. In this net profit, I will not include two things. One, income from an overseas branch or subsidiary, and dividend from a company already paying CSR. Now this 2% can be three extreme scenarios. One, I spent exact 2%. Good. I spend more than 2%. So if you spend more than 2%, I will carry it forward to next 3 years. If you spend less than 2%, they are deciding ongoing project or not ongoing project. Simple. Ongoing project, they are saying very easy way, spend within 3 years. In the 3 years, in the first 30 days, you will transfer to separate bank account. In the 3 years, if you don't spend, then in the next 30 days, you will transfer to fund under schedule 7. Not ongoing, project is not yet started, you are not capable. Within 6 months of end of financial year, again you transfer to fund under schedule 7. For all the spending, we need to have a committee called CSR committee, which is mandatory if the spend is more than 50 lakhs. For this committee, public company should have 3 directors if independent director is required for that company. Otherwise, 2 are enough. Private company, anyway we will have only 2 minimum, then I will have 2 directors. Independent director concept is not there for private company. Foreign company means you should have the person authorized representative under section 380. Next, a few other small amendments which are important. During CSR activity, if you created a capital asset like hospital or you purchased the hospital, that should be registered either under a name of section 8 company or a public authority or a trust. Public authority means corporation, etc., or registered trust, or the beneficiaries for whom we are building the hospital or school. Next, which profit you have to take, PAT or PBT? PBT. Can multiple companies come together and do a project? Yes. If holding company is following CSR, should subsidiary follow? No. Apply limits for them separately. For other activities, administrative work, CSR expense can be maximum 5% of the CSR expense can be admin expense. Sir, where to spend? First, where you should not spend is important. Employee and their family. You can't spend outside India. You can't give donation to political parties, one-off events, marathons or awards or charity or any employee statutory contribution is not possible. But if you are doing charity, you want to donate. Donate to whom? Section 8 company who has a track record of 3 years of doing similar objects. Schedule 7, we have our story, but remember some key points: malnutrition, poverty, education, art, culture, then sports, Olympic sports, recognized sports, public library, then research for contribution for research, natural disaster, Har Ghar Tiranga, COVID, rehabilitation center, all these we can say, or let's say restoration of sites, all of that you can spend. Okay. Next, last 3 points in CSR. First time when CSR is applicable for the company, they have to register in CSR 1 for CSR registration. Second, CSR 2, you have to file AOC 4. Along with AOC 4, you have to file CSR 2 on yearly basis, giving details of all updates that happens. Sir, while doing CSR, I didn't plan, sir, but I earned some profits. Those profits you also spend for CSR. If you are not spending for CSR objects, then within 6 months you will transfer to fund under schedule 7. Lastly, impact assessment. For whom it is eligible, if the CSR spend is more than or equal to 10 crores in the last 3 years, then I have to do an impact assessment. Then assessment is for whom? Not for all the projects. If there is any project in the past which is more than or equal to 1 crore, which should also be completed, and that completion should have been 1 year over. I will again repeat, project over, completed, it should have been 1 year since the date of completion, and project is 1 crore or more. Then only I will do impact assessment, then only I can see the impact. For that, one professional is doing a independent agency, can be CA, can be not CA also. For him, the limit that they have given is 2% of CSR or 50 lakhs, whichever is higher. In that 5%, I will include 2%. That's it. Revision about CSR and a whole chapter following, guys. Okay. Perfect. Let's revise section numbers of this chapter. 128, books of accounts. 129, preparation of financial statements. 2 subsection 40, loudly. 129A, periodical FS. 130, reopening of books. 131, voluntary reopening. 132, NFRA. 133, accounting standards. 134, signing off board's report. 135, CSR. 136, circulation of FS to members before AGM. 137, circulation to members after AGM. 138, internal audit. That's about it, guys. Those who are watching recording, for remembering section numbers, write it 3 times now itself. At least half of those will remember. That's it, guys. Thank you. Okay, so basically what are GenZ notes? I want you to keep in the material, this is the first chapter we are doing GenZ notes for. Keep a separate notebook or last set of 30 pages for your GenZ notes. How to do it? For the full chapter, write it as short as possible. Okay, we are not fully done with dividend as of now. So some more concepts like interim dividend, all of that left. First we started off with 123. Put an arrow. You can write in any style, guys. Basically, write in a way, use arrows, symbols, abbreviations, short forms, long forms, whatever, that only you can understand. After 10 days, உனக்கு தான் அது புரியணும். You should be able to understand. Your neighbor should not understand. If they understand, well and good. Okay. Every day I will review your Gen Z notes in class. Some of them here already finished because they have attended class before. So they are exempted. They don't have to do it again. You just finish your Gen Z notes. Those who are attending first time, recording students, today if you are watching this recording, don't sleep until you finish this Gen Z notes. So 123 is declaration of dividend. Yes. Sorry, start panya. Yeah. Thank you. Keep reminding like this. Okay. Dividend. This dividend will be recommended by whom, guys? Board of directors. Approved by shareholders. Correct? I'm right. I'll just zoom in a little more maybe. Okay. Recommended by board. Approved by shareholders. Such dividend will be paid in what mode? Only in cash through bank modes. Okay. I'm just going in the same flow what we discussed. So approved by shareholders. This approval, can they increase? So cannot increase. Cannot increase. That means it's understood it is can be decreased. You can accept the same, you can reject. In other words, approval you can reject, reduce. Are you following us? You can reject or reduce. Of course, this middle word is approval. I'm only writing the basic points, guys. 5 lines, half a side line you should be able to finish. So dividend recommended by board, approved by shareholders. All the approval points are done. Dividend in cash mode, banking channels. This dividend is paid to whom? Shareholders who are equity shareholders, or these kind of points we don't have to write in Gen Z notes. Why? You know this. Even before you came to this law class, I am sure you know dividend is paid to shareholders, equity, and unnecessary points don't write. That's why I wrote and erased. If you wrote now, you strike it. Okay. Don't write unnecessary points. It's the key summary points. Exam la kekava poram. Dividend is paid to which shareholder? You tell me if you are going to set the paper. Will you ask this question? So don't put this in Gen Z notes. Unnecessary. Continue the line. Next. Okay. The same dividend, or write here down. Whichever you can write in any. You can create however you want, guys. Sources. What is the source? Current year, previous year, combination, or guaranteed by government. 4 points in bracket. Current year, previous year, combination, government. Write short form CY, current year, PY, previous year. But you should remember that. Okay. Here key point will be what? For current year and previous year, reduce depreciation. I will reduce depreciation. Are you following, guys? Clear? Next. I hope it's visible. Visible for last row. Maybe I will zoom in a little. Visible, assure. Super. Okay. Next. Next point is what? After source is done, we have to see if such dividend is adequate or not. If the answer is no, that means when will no come? If you are using previous year profits, if it is no, we split into 3 rules. That's it. 3 simple rules. What is rule 1? Average of last 3 years. That's it, right? In short. Then you can use 10% of paid up share capital plus. Don't need to write, don't write rule name and all. I need the provision. And last one, balance of pre-reserves should be at least 15% of paid up share capital. Are you following, guys? Okay. Then these 3 rules are not applicable for a 100% government company. That means 100% owned by government. Are you following, guys? Clear? Anything else in section 123? We have some more points I'm yet to teach you that you can write here. Basically, reserves and surplus is only free reserves. Okay, that is one point. That's it. I will write in timeline. Timeline எழுதிடலாம். Okay. Second point here you can write, in this itself you can write 10% minus current year loss if any. Current, with the second rule it comes. Whatever you withdrawing in 10%, reduce with current year loss if any. You have to make these notes, guys. In fact, I'm doing it little more detailed this time, because last time when some of the students made notes, avanike purila. I will review your notes in the class. I'll ask you questions from that. Okay. Some students, they made the notes and they came, I asked them questions. They were not able to, what is this in Keta? See why? Sir, tell us, sir, and so on. So write only if you can understand and remember later. I will remember CY na current year for me. I will write in my language COY na company. But all these abbreviations of Gen Z notes, you should not write in. Remember, guys, don't use any of these APP na app and vandrum apparama. Okay. I wrote approved. Later you should not ask, sir, what is this? Are you following, guys? Don't use these abbreviations in exam. I'm repeating. If you use this, your marks also will become abbreviated. I cannot help you that time. Okay. 123 is done. That's it. How many lines for this? How many lines it took you? 2, 3 or 4 lines? Okay, show your notebook. Yes, first row. Camera, I hope you can see it, guys. You should not be able to see. Anybody else? Yes, Varsha, where is yours? Show. Oh, it's full last time written. Okay. But this is the whole, that's it. Till here is the whole chapter. First 5-6 lines. Okay. 123 is done. Next is what? 124. Before I come to 124, let me finish the other small ones. 125 I yet to do. 126 is what? One line. Dividend, rights, bonus. If there is a dispute, will be kept in. That's it. Not even one line. Half a line. Half a line. 126 is done. 127. I am giving space so it's easy to copy. 127. If dividend is not paid in 30 days, then for company 18%, for director or officer 2 things, up to 2 years plus 1000 per day. That's it. 127. This 127 not applicable, or in other words, exceptions ஒரே லைன்ல முடிச்சிடலாம். All the keywords. What is the first exception? Operation of law. Section 126 is an exception. Then lawfully adjusted. Instructions or directions given, no? Directions given and not, okay, and communicated is the word. Whatever it is, it should be communicated and communicated. Next class I'll try to change the font. It's okay, not communicated. And last one, others. No, others the natural calamity, whatever. Okay, 5 points. That's it. 127 we have summarized in 2 lines. That's it. We have summarized in 2 lines. And lastly, 124, you just recreate that timeline in your note. You know the timeline already, so I will just recreate. 5 days, all inclusive, 30 days. Next 7 days. Next 90 days, all inclusive, 7 years. After this 125 comes, correct? 125, which is IEPF. Let me fill in the values here. Within 5 days, separate. Within 30 days, you have to make the payment. Here if it is within 7 days, if it is not paid or not claimed, and again if you don't transfer within 7 days, you have interest at 12%. 90 days, what is the point? Summary report in website plus central government authorized website after 7 years IPF. That's it. Are you following, guys? You will prepare a timeline like this. This is what I taught you so far. We still have some provisions, Nidhi company exceptions. We still have interim dividend. I don't want to teach now. You are close to lunch. We will again come back and add to our GenZ notes. Okay. Are you following, guys? Okay. So if I just unzoom the whole thing, that's it. Here it looks little longer because I am writing it big for you to get zoomed. That's it. This is the GenZ notes of dividend chapter. Those who are watching recording, just pause, zoom in and read. I will just maybe zoom a little more. That's it, guys. This is section 123. Recording fellows, pause, just pause and copy. This is 126 to 124, 126, 127. That's about it. Are you all with me, guys? This will be here. You can copy till the end of lunch. We will go to lunch. One last time, let's revise section numbers. Inge lunch solra, recording ignore it. 123, declaration of dividend. 124, unpaid dividend. 125, IPF. 126, abeyance. 127, 123, rule 3, 3 rules. 100, EGM. 50, calls in advance. 51, dividend paid on nominal or paid up value. I didn't write 51 here because I'll put in share capital chapter of GenZ notes. If you want, you can write it here itself. Yeah, 62 writes, 63 bonus. So in the first session, we are done with almost remembering 10 section numbers. Any doubts? We will close, go for lunch. Thank you. Okay, hi guys. Now we are going to revise full meetings chapter 88 to 122 using our GenZ notes. Please refer to your GenZ notes. We will start off in the same order. 88 talks about register of members. What are the key points here for exam? Update in register within 7 days after any transaction. Where will I keep the register? Registered office. Can I keep anywhere else? Yes, you can keep anywhere else in India if company passes a special resolution and if 1/10 of members reside in that location. That is which section? 94. Okay. Anywhere else in India, and this register will be kept for how many years? 8 years. Other points in this, in the register, if there is any charge, lien, or if any security is enforced, you have to update in the register of members. If there is any death, insolvency, or any transfer to IEPF, that also will update in register of members. Last one, if the number of members are less than 50, then no need to maintain index. I hope you are able to recollect the points. That is more important than being able to tell all the points. Next, 88 subsection 4 talks about foreign register, which is same as Indian register. Only difference is, once you establish a foreign register, you have to intimate ROC within 30 days and then backup that should be sent back to the principal location within every 15 days. Signing difference, the CS and director will sign for both 88 and 88 subsection 4, but the difference is he has to append on every entry. Foreign register, every entry you will sign there, page wise, it's enough. Next, 88 over, then we went to 94 also. Again related to this, we are going in the same order how we took the class. 91, closing off register of members. Can you close? Yes, maximum 45 days. At one stretch, 30 days. Before closing, notice of 7 days. Perfect. Then we saw two sections, 89 and 90. BO and SBO, beneficial owner and significant beneficial owner. BO, they are saying, registered, what they are trying to say, the registered owner will intimate the company within 30 days when he appoints a beneficial owner in form MGT 4. Same way, beneficial owner also will intimate company within 30 days when he is appointed MGT 5, and the company will inform ROC within 30 days in MGT 6. This concept of BO is not applicable for a government company or a mutual fund or venture capital fund. Are you able to recollect, guys? That's it. Next, 90 also same thing, but here what they are saying, an SBO will intimate company within 30 days in form Ben 1. Registrar will intimate company within 30 days. When he appoints an SBO, they have not given the form number. Company will intimate ROC within 30 days. Who is an SBO? He has 10% or more of voting power or paid up share capital or getting the dividend or has control or significant influence. Any of the one. Then exception. This SBO is again not applicable to a government company. Additionally, central or state government and your mutual fund, venture capital fund and REIT. Two new points added in our syllabus here is Ben 3 and Ben 4. What is Ben 3? Register of SBOs. So company has to maintain register of SBOs open for inspection for 2 hours. Ben 4 is very important. If somebody is not reporting to the company, if company has a doubt, I can send them a notice asking them if they are an SBO. So notice to doubtful individuals in the last 3 years, even if you are not shareholder in Ben 4, if they are not responding to the Ben 4 notice, then you can apply to tribunal within 15 days. Are you following us? This is section 90. Then this were the procedures. So we finished 88, 89, 90, 91, 92, 93, 94, 95, except 92. We will come back to that in some time. Then we went to meetings. First is 96, which talks about AGM. What are the key points here? No need to mug up all. Like I'll ask questions, you will answer. Where will be the AGM? Registered office. Same city, town or village. What time? 9 a.m. to 6 p.m. I can start anytime between 9 a.m. to 6 p.m. Where can I keep anywhere else in India? Yes, if company passes a unanimous resolution. Which day can I keep AGM? Any day except national holiday. If it's government company, central government can keep it anywhere in India. Next, time. First, AGM will be held within 6 months from end of financial year and maximum 15 months time gap between 2 AGMs and 1 every calendar year. You have to satisfy all the points. But if it is first AGM, instead of 6 months from end of financial year, they are giving time of 9 months from end of financial year. Next, ROC can grant 3 months extension. So 6 months can become 9 months, but extension is not allowed for the first AGM because first AGM already has 9 months. Section 8 company, time, place, date of the AGM is decided by the board of directors. One more thing for section 8 company, for AGM instead of 21 days notice, 14 days notice is sufficient. Next, 97, 98. 96 is again what, guys? AGM. 100 is what? EGM. 97, 98 is tribunal to call for AGM. Tribunal to call for AGM. Even if one member attends, it becomes a valid meeting. Even if that one member is a proxy, we will consider as a valid meeting. Next, 99 is penalty for not holding AGM or EGM. Then EGM we will take in the last, guys. We are going in the same order how it was taken for us in class. We can't go to EGM after 98, 99 because you should know about notice. So for every AGM, notice is mandatory. So 101 talks about notice. What are the key points here? No need to mug up all points. Notice should be 21 days before AGM. 21 clear days. That means date of AGM, date of sending notices not counted. If it's postal, additional 48 hours will be given. If it is less than 21 days, yes, you can give a notice less than 21 days. If 95% of members agree in writing or electronic mode, latest RTP question. Section 8 company we already saw, 14 days notice. Such notice should be clear, explicit, unconditional. I can't give any conditions. Next, intentionally I didn't give the notice. Deliberate omission to give notice to any member makes it void or invalid. If it is not deliberate omission, genuine cases, then the meeting is valid. Company will prove with the postal challan. Then to whom the notice will be sent? Shareholders, legal representative of deceased, auditors, assignee of insolvent member, directors. Don't mug up, just think shareholders, directors, auditors. If shareholder dies, legal representative. Shareholder becomes insolvent, assignee of shareholder. Then the notice will of course have details of place, date and time. Otherwise it's not even a notice. Then we went to the important section for us, section 102. Explanatory statement. Let me revise this point again. In AGM, 4 businesses: adoption of FS, declaration of dividend, appointment, reappointment of directors, appointment, reappointment, remuneration of auditors. These four business are what, guys? Ordinary business. For ordinary business we have only ordinary resolution. All other business in the AGM is called special business, and special business can be ordinary resolution, special resolution, or unanimous resolution. In EGM, all business including those four business are called special business. What this section says, learn what is special business. AGM other than those four. In EGM, all business. For every special business you need an explanatory statement is mandatory to be attached along with the notice. What is explanatory statement? Giving more details about the transaction, with whom I am entering the transaction, how much is the transaction, party, all those details. Okay. Next we jump to section 114 because it's related to resolutions. 114 talks about ordinary and special resolution. Whenever you pass a special resolution or board resolution, you will intimate ROC within 30 days in form MGT 14. That is given in which section? 117. So resolution, special, board, intimate ROC within 30 days in form MGT 14. This will come in every point wherever you write about special or board resolution. Be careful, not for ordinary resolution. Then we jumped again back to meetings chapter, main core meeting, section 103, which talks about quorum. What are the important points? Exam ku what to remember for quorum. Private company 2 or AOA, whichever is higher. Public company up to 1,000, 5, 1,001 to 5,000, 15, more than 5,000, 30. People are personally present. We do not count proxies, but you will count representatives. Representative under 112 and 113. 112 we have 2 people, president, governor. 113 we have 3 people, central government, state government, company. This representative is counted for quorum. Are you following, guys? Now if I am representative for 4 companies, I will be counted as 4. Next, this quorum should be present within the first 30 minutes. If not, meeting will be adjourned. Secretarial standard recommends that quorum is present at the time of passing every resolution, not the act. Standards recommends that. Okay, next, if there are joint owners, you will count as 1. Will I count preference shareholders for quorum? No, but I will count them if they can vote. So in a meeting of preference shareholders, or dividend is not paid for 2 years, for cumulative preference shares, I can count them. Next, if the meeting is adjourned, when it will be adjourned for? Board will decide when the meeting will be adjourned if the quorum is not there. If board is silent, it is adjourned to next week, same date, time and place. In the next meeting also quorum is not there, then the members present will be quorum. For example, for my company I need 30 members, only 20 are there, it becomes the quorum. Then for the adjourned meeting you have to give a 3 days notice to all the members or publish in 2 newspapers. What if it is an EGM which members called, and EGM is adjourned because there is no quorum? No, that concept is not there. EGM cannot be adjourned when members call for it. If quorum is not there, meeting is cancelled. So adjournment comes only for AGM, and even for EGM if it is called by the board of directors. Next we went to section 104, simple, chairman. What is important? Chairman has the power of casting vote, second vote in case of a tie. Who will select the chairman? The board among themselves will select the chairman within 15 minutes as per articles. If everybody is okay, that chairman will continue. If somebody is contesting, no, I am not okay, then members can elect a chairman among themselves, but that members can protest only if they can demand for a poll. To demand for a poll, you need to have 1/10 of total paid up share capital, otherwise you can't demand for a poll. 105 again, big section. Proxy. What all we saw in proxy? Proxy can be proxy for maximum 50 shareholders, plus that 50 put together should be maximum 10% of voting power. If one person has more than 10% of voting power, then you can be proxy only for one person. What proxy can do? He can do only one thing: vote by poll. He is like a postman. Don't write that in exam. What he cannot do? He cannot talk. When I say he cannot talk, he can't ask questions to chairman. He can talk among themselves. Okay. He cannot vote by show of hands. 107 voting he can't do. He is not counted for quorum. And if member comes, then member will vote. Proxy cannot vote. For all of this, we saw the logic. Here we are focusing exam points. What are the timelines for proxy? Before AGM, 3 timelines. 24 hours before, I can start inspecting who are the proxies. 48 hours before, you can appoint proxy. 72 hours before, you can request for inspection. That means I can request for inspection 72 hours before and start the inspection 24 hours before the AGM. Are you following, guys? Then if I appoint multiple proxies, who will be valid? Last one who is appointed 48 hours before AGM. After that I will not count. Next, proxy. Should he be member of company? Can be member, cannot be member. There is no mandatory rule over here. Is this clear, guys? Proxy important. 106. It's not about who cannot vote. Somebody who is eligible to vote cannot vote if he has calls in arrears or there is a right of lien on shares. Are you able to recollect the points, guys? Otherwise, revise and then watch this. Okay. Show of hands. Now, section 107 talks about show of hands. For all resolutions, you will do only by show of hands unless it is voted already under e-voting in section 108, or if somebody is demanding for a poll under section 109. That means already we saw you can demand for a poll in 104 for chairman, or you can demand for a poll in 107. So 109 has intros even 104 and 107 itself. Now coming to what is 109 poll. To call for a poll, you need to have 1/10 of total voting power or 5 lakhs paid up share capital face value, whichever is less. Any one irtha podu. Whichever is high means you should have higher. Any one 1/10 of voting power or 5 lakhs face value. Then you can demand for a poll. Once you demand for a poll, when the poll will happen? It will happen that time itself. If you are asking for 2 things, electing chairman, if you want for adjournment, because that should happen that time. So electing chairman, adjournment happens that time. Other cases, it can happen within 48 hours of AGM. Once poll is done, that scrutinizer will show the dabba, all of that key points. Within 3 days you have to give result. Within 7 days you have to give report. Report says how many votes in favor, how many against, how many not counted, all of that. Then we went to section 110, which talks about postal ballot. In certain cases or in certain resolutions have to happen in postal ballot. A few of those what we saw, the whole list is alteration of object clause, 27 variation of objects unutilized money, 43 rule 4 DVRs, 48 variation of shareholder rights, 14 alteration of AOA. In that, conversion of public to private or private to public, both are considered. Then section 12, shifting of registered office outside the city. Section 68, buyback. So if any of this happens, then you have to vote only by postal ballot. Then they are also saying postal ballot is deemed to have been complied if you are voting under section 108 in electronic voting. So no need postal ballot. Additionally, if you are a 1-person company or members are up to 200. Here they are not saying private company up to 200. Can be private, can be public. If members are up to 200, no need postal ballot. If postal ballot needed, you can vote under e-voting. What is the timeline for postal ballot? Once you get the ballot, you have to reply within 30 days. Once you reply, all the from cutoff date, the last postal ballot, company should give report within 7 days and advertise 5 days before voting period is starting. What do you mean by voting period? The time when company starts opening all the ballot papers. Next to 108. 108 comes when postal ballot section itself tells it is enough if you do in electronic voting. Here only key timelines are important for me. If this is the date of AGM, you need to give report after 3 days and voting should be open at least for 3 days before AGM. In such a way, it closes at 5 p.m. before the date of AGM. Cut-off date should be 7 days before AGM. That means if you are a shareholder up to 7 days before AGM, it's enough. On that day, if you are a shareholder, you can vote. Then 21 days before AGM, you are anyway giving notice. When you are giving that notice, you should also publish in 2 newspapers that we are going for electronic voting, so people are aware. Is this mandatory electronic voting? Not mandatory for all companies, but if you are a listed company, that's it. You have to follow electronic voting. Or if your company has 1,000 or more members, you have to go. That means public company having more than 1,000, private can't have. Next to section 100. Now you can understand section 100 better because we finished notice. Simple. EGM, who can call for it? 3 people. Tribunal can call under section 98. Board can call by passing a board resolution, shareholders can call if 1/10 of paid up share capital if they are calling. That means that same provision of 110, not 110, 109, that 1/10 of paid up share capital if you have, you can call. That means you can call for a poll, or you can call for EGM, or you can call for chairman for poll. All the same is 1/10. Where I will have EGM? Anywhere in India, not the registered office. Of course, first try registered office, not possible. Anywhere in India, we have many case laws for that. Which day? Any day except national holiday, just like AGM. Next, once they make the request, people making the request are called requisitionists. The EGM should be held within 3 months. Within 3 months, EGM should be held. First 45 days is for board. If board fails, then members will try to collect the details of members and try to conduct within the next 45 days. Any expense for conducting EGM will be reimbursed by the company. Are you following, guys? I will wait for the first 21 days. If no notice comes, then I will start initiating the process. These are the next, all the big sections. Then we saw some small sections. 116, very small. If a resolution is passed at adjourned meeting, it is treated as if it's passed on that day and not any previous day. That's it to remember for exam. 120, all documents and inspection required in this chapter, not act, in meetings chapter, can happen in electronic mode. Applicable, same 108 applicability, listed or any company having 1000 or more members. Next we saw 121, 122, 120, 121, 122. 121 important. For every listed company from date of AGM within 30 days in form MGT 15, you have to file a report of AGM to the ROC. This report will be signed by the same people who signed the FS in section 134. Chairman, if not chairman, 2 directors where one is managing director and CS will sign. CS is additionally will sign here. What will be reported? AGM actually took place. What is the proof? When was the note? Give attached copy of notice. Attach quorum details. What resolution is passed? If meeting got adjourned, details of adjournment. Who is the chairman? Photos, documents will be filed to ROC for proof that AGM actually took place. 122 small section. OPC chapter is not applicable for. AGM is not applicable for OPC. But how will I pass resolution? Ordinary, special or board? I will intimate company and company will just update in the minutes and they will sign. Are you following, guys? Then we saw 2 sections, 111 and 115. Both are similar. 111 is for circulation of members resolution. 115 is for special notice. Now 111, what they are saying, from the date of AGM, you can circulate a resolution if you give to the company at least 6 weeks before AGM. If you just want to give information about a business in the AGM, give it 2 weeks before. If you give it 6 weeks before, it gets added into the notice. Members can circulate resolution included as business. If you give 2 weeks before, only information. Again, for this circulation, you need to have 1/10 of paid up share capital. Same thing 115, special notice for 2 things. If you want a retiring auditor shall not be reappointed. I don't like existing auditor. I don't want him. First, or appointment of somebody else other than the retiring auditor. I have nothing against existing auditor. I want somebody new. For this, you can again send a notice, special notice, for which you should have 1% of voting power or 5 lakhs paid up value, face value, face value, paid up value, whichever is first, 1% or 5 lakhs. Here you should send it between at least 14 days before you have to send, or 3 months before you should send. In this time gap you have to send. If I send before 3 months, it is deemed to be sent within 3 months. Once you send this 7 days before the AGM, the company has to circulate this to all the members. If they are not able to circulate, at least publish in newspaper and website. This is section 115. Are you actually able to recollect, guys? 3 months, 14 days, then above 6 weeks, 2 weeks, all of that. Okay. Next, 118, simple, minutes. What they're saying in minutes, I'll ask questions, you try to answer. Minutes are kept for how long? Permanently. Who has the custody? CS or director or any person authorized by the board. Where I will keep the minutes? Registered office. They have not given any provision to keep anywhere else, so I will keep it registered office. Separate register for each class of meetings, for shareholder, debentures, all of that. Minutes will be numbered consecutively. Minutes should be signed within 30 days of conclusion of AGM or board meeting. Board meeting or AGM within 30 days I will sign. Who will sign? Chairman only has to sign. If chairman is not able to sign, then board meeting means chairman of next meeting can sign. Reason? Because board meeting will happen soon. If it is general meeting, then director authorized by the board. If the chairman is not able to sign, death, then some other director authorized by the board will sign. This is 118. Here in 118 for section 8 company minutes is optional for whatever reasons we discussed, confidentiality, all of that. Last section that we have actually revised all the sections. 119 talks about inspection of minutes. Inspection of minutes. Who can inspect? Only members can inspect. That too they can inspect only for general meeting. Members cannot inspect for board meeting. When you can inspect? Business hours. Any 2 business hours you can inspect. Inspection, how much to pay? Free. If you want copies, you should get the copy within 7 days. For copy, company can charge maximum 10 rupees. Are you following, guys? But now section 120 says you can keep in electronic mode. Therefore, if the minutes are in soft copy, how much you will pay? Nothing. It is completely free. But soft copy can be given only for last 3 years. If company defaults, of course there is a penalty, and tribunal you can apply to them and they will order the company to provide for the same. Are you following, guys? Let's revise the section numbers alone once from first. 88 register of members. 88 subsection 4 foreign register. 89 BO. 90 SBO. 91 closing register of members. 92 annual return. 93 not there. 94 place of keeping register of members, that 1/10. 95 register as an evidence. Then we saw 96 AGM. 97 tribunal to call AGM. 98 tribunal to call EGM. 99 penalty. 100 AGM. This is one set. Then we saw 101 along with notice you send. 102 explanatory statement. Once you send both of this, 103 quorum will come. Once quorum comes, chairman 104 will come. If the quorum is not able to come, you can appoint proxy. Why all of you are coming to vote? Who cannot vote? 106 who can't vote? 4 types of voting. 107 show of hands. 108 e-vote. 109 poll. 110 postal ballot. Then some other miscellaneous sections. Here 111 circulation. 115 special notice. 112 representative of governor, all of that. 113 representative of company, central government. Next to 114 special or ordinary. 117 file to ROC within 30 days. So 2 sets. Then one leftover section. 116. What is 116? Adjourned meeting, that resolution will be passed. Then 118 and 119 minutes, inspection of minutes. Then 120, 121, 122. 120 is documents in electronic mode. 121 listed company report on AGM. 122 OPC not applicable. Whenever we tell a section, are you able to recollect the provision? 20 minutes we revised meetings, but if you are doing it by yourself, a little more detailed, 45 minutes or 1 hour with our GenZ notes, you should be able to easily revise one of the biggest chapter. Are you feeling confident now, guys? Yes? No? Fine. Thank you. Yes. Hi guys. Now quickly let's revise charges chapter from section 77 to 87 using our GenZ notes within 10 minutes. So charges in 10 minutes. In this chapter, the first important section is section 77, which talks about duty of charge holder to register the charge. Here if you see, there are only 4 core provisions. First, register the charge with prescribed fees within 30 days from the date of loan. Next, if you don't register within 30 days, in the next 30 days, you will register by using additional fees. Next 30 days also, if you don't register, then they have given you the next 60 days with ad valorem fees. This is something everybody knows. So the rule is 30 plus 30 plus 60. Second, if there are multiple loans and multiple lenders have to register, Whoever registers first. Concept is whoever registered first has right over people who have registered subsequently. Sir, what happens to the loan if you don't register? Concept, non-registration makes the loan as an unsecured loan. That's it. If an asset under charge is sold, then the new buyer of that asset has to again register the charge. In case the property is outside of India, we will have verification on different basis under the hand of the charge holder or director or company secretary of the company. In our class notes, we categorize them as A, B and C. Okay, next, section 78 gets activated when 77 is failed, 78 gets activated. What is this? Where the charge holder will register if company fails. So for example, if the company is not registering, Vijay Mallya, Kingfisher took a loan, they are not registering the charge, then the charge holder, the bank will register the charge. When they will register, usually they will wait for the first 30 days. If nothing happens in the first 30 days, so after that first 30 days, the charge holder will intimate ROC for registration. He will send a notice who the ROC, once the charge holder, the bank tells ROC we want to register this charge, the ROC will send notice to company and wait for 14 days. Why he will wait for 14 days? In these 14 days, the ROC will see if there is any objection coming from the company. If no objection comes or if the company remains silent, then ROC will proceed for this registration. So this is section number 78. Next we will go to section number 79, where 79 talks about modification of charge. What is modification of charge? Okay, yeah, hold on. Now next is 79, which talks about modification of charge. Yeah, in 79, which is modification of charge, what we learn is, one second guys, hide this scale, I don't know how it came. Yeah, don't count these few seconds for the 10 minutes. Modification. Once you register a charge, if you are making some changes like change in interest rate or change in terms and conditions or change in repayment schedule, 5 years you are making it 7 years, interest rate 10 is becoming 12, partial release, you took a charge on a house, ground first and second floor you're releasing, or increase or decrease in limit of loan, 10 crores you're making it 15 crores, or making the charge as a pari passu, making all the parties equal. If this happens, you have to intimate ROC within what is the time limit? Same time limit of section 77, 30 days and 60 days. Okay. Here what is important to note, I'm sure you have been waiting for that. In change in interest rate, you don't have to intimate ROC if it's a change in bank rate. Sometimes bank changes the rate for everybody, that you don't have to intimate. Or whenever you are changing the limit for a working capital loan, that working capital loan we don't have to intimate to ROC because that is not taken as a modification. Going in the same order, we are done with 77, 78, 79. 80, another important question many times came in exam, which is date of notice. Whenever a charge is registered, section 399, which talks about public document, it is deemed that everybody transacting with the company have a doctrine of constructive notice, that they are aware about the charge which is registered with the company. Therefore, third party is deemed to be aware of the charge. Tomorrow, third party cannot tell, we did not know that charge was there against this company for this loan or against this asset. Next, 81 and 85 are new additions in new syllabus. Both 81 and 85 talks about maintenance of register of charges. That's it, as simple as that. 81 talks about ROC to maintain register of charge. 85 says company has to maintain register of charge. For ROC, in the website they maintain register of charge, that register is sufficient. For company, key points to note here, the register of the charge with details of all the charges created should be maintained permanently. Only very important, it has to be maintained permanently. Instrument of charge, the proof of charge, that instrument is, if you keep for 8 years, that is sufficient. This is 81 and 85. Next, 82 and 83 both relate to satisfaction of charge. What do you mean by satisfaction? Once the loan is repaid,
82 talks about company to intimate ROC for satisfaction of charge. 83 says if company does not intimate, company is lazy, then ROC will record satisfaction by themselves. When should you intimate ROC for satisfaction? Here the time limit is very simple. First they are saying within 30 days of property being released from company or property sold or company repaid the loan, within 30 days you have to intimate ROC as the loan is repaid. Otherwise they are giving overall 300 days, which is first 30 days plus additionally 270 days. So overall 300 days inclusive of these first 30 days. Whenever you intimate ROC, what ROC will do? ROC will cross check, and if there is no objection, so what ROC will do, since company told loan is repaid, they will cross check with the bank and they will ask the bank wait for 14 days. If bank doesn't give any objection or bank is silent in these 14 days, then ROC will go and record satisfaction of charge. 83, where loan is repaid but nobody has intimated to ROC, then ROC by itself can record satisfaction of charge. By themselves they will record satisfaction of charge. Here once they record satisfaction of charge, they will intimate the concerned parties, company and the bank, the charge holder and the lender will be informed about the same. If they have objection, then they have to come back. 84 is another simple section. Sometimes when company goes into liquidation, in the process of winding up, they may appoint official receiver or manager will be appointed. He is nothing but liquidator. Who will appoint these people? Generally the court will appoint, sometimes bank will appoint. Whoever appoints this official receiver or manager, all they are saying, the person appointing, the appointer has to intimate ROC within 30 days. Intimate ROC within 30 days. That's about it. Sir, what is 86? 86 is penalty. I'm coming in order, guys. So 84 is done. 81, 85 is register of charges. 86, in any of the filings in section 77 or in 79 modification or 82 satisfaction, anywhere if wrong information is given to ROC, then such officer is liable for fraud under section 447 if the same was intentional. Last 87 is condonation of delay. We have seen many time limits, within 30 days, within 300 days, within 30, 60 days. What if the time limit is crossed, sir? I still want to apply. Then whenever you apply, that from that period only the loan is treated as a secured loan. It's treated as a secured loan, guys. But till that period, the loan will be treated as unsecured. No retrospective amendments. But even though you are late, if you request central government can condone the delay and accept registration even if it's after 2-3 years after loan. But only from that date of registration, it is treated as a secured loan. Lastly, rectification. Some mistakes in loan amount or interest or any documents or any data already submitted in 77 registration, 79 modification, 82 which talks about satisfaction. If there are any errors, you can again reach out to ROC where they will rectify. So this is in summary, guys, our charges chapter 77 to 87. All the GenZ notes are available in the description of the video in the link. You can go and download them. Ideally, I tell our students to make their own GenZ notes. Your own handwriting works for you. But if you don't have time for that, then you can use these GenZ notes, make some modifications to suit your handwriting, etc. Thank you so much, guys. Keep learning, keep growing.
Hi guys, welcome to the GenZ revision of deposits chapter. We'll try to close in 15 minutes. Now, deposits, if you see, there are only two major questions. First, they will ask you what is not a deposit. You have to remember list of 14-15 things and whether it's deposit or not a deposit. Second thing is procedure for deposit. There are some many key points over there. What are the limits, etc. We will go through, guys. Okay, let's start off. Of course, our book is there, but in GenZ, I'm just using these handwritten notes. What is not a deposit? They have given list of many things. Basically any type of loan. First, let me give you context. Any type of loan that you get from any party or advance from government outside India, government department, private companies, public companies, banks, these are not deposits. So look at this. They are saying amount received from central government or local authority is not deposit. Money guaranteed by central or state government is not deposit. From foreign banks, foreign government, public financial institution, debentures or bonds, listed non-convertible debentures, all these are not deposits. Are you following, guys? Because these are debentures, it's not deposit. Next they are saying, coming to application money point. If you remember application money, we have section 39 application money, and we have what to say private placement. In private placement they are saying money should be allotted within 60 days, and then if not you have to refund within 15 days, correct? That means I totally have 75 days, I totally have 75 days to refund, correct? To allot and refund. If I don't allot and refund within 75 days, from 76th day I will call it a deposit. Same thing in section 39, you have to allot within 30 days, and 15 days you have to refund if you are not allotting. So they are saying I will treat as deposit from the 46th day after expiry of 45 days. Next they are saying, in case of a private company, directors or relatives of directors giving loan is not a deposit. So director giving loan to deposit, or director's relatives giving money to director is not a deposit. These points are something like this only. You should just know what is deposit, what is not deposit. Next point, amount held in trust. I simply gave you money, keep it as safekeeping, I will come and take it. Bank locker, keeping in bank locker is not a deposit. I'm talking about locker facility. Okay, next look at this. Sometimes they will tell promoter should give loan to the company as a condition so that they can get loan from some other bank. They will tell the word, use this stipulation. Promoter has to give loan to the company, only then bank will give loan to the company. As long as this bank loan is there, promoter loan will not be treated as deposit. But once the bank loan is repaid, promoter loan should also be repaid. Are you following, guys? Next, security deposit, contract of supply of goods. Sometimes for some goods, and let's say I'm ordering 100 kgs of sweets, I have to give some advance. These kind of security deposits are not deposits. Okay. Advance for subscription. Now for example, sometimes when you get this Mint magazine or Netflix, sometimes you will pay for Netflix 1 year in advance. Sometimes Apple Care warranty, we will pay for 1-2 years in advance, correct? So let's say for any kind of subscription, Hindu newspaper, etc., any subscription you can adjust against the receipt of such thing. So advance or subscription is not a deposit, because the entry for advance is bank account debit to advance for sales. That is not a deposit. Advance for consideration for future services. Sir, AMC, annual maintenance contract, all those future service I am paying now itself. Sir, college fees I am paying now itself for next 2 years. All these are not deposit. But here they are saying advance for future contract. Here they are saying basically 5 years or terms of contract, whichever is lower. That means they are trying to say maximum advance you can pay is up to 5 years. It cannot go beyond that. Then they are also saying one more point, received by sectoral regulators. Sir, I am paying advance tax for income tax department. For TRAI I will pay some, what to say, commission or some security deposit. So sectoral regulator, government department, what you are paying from central government, state government directions, I will not consider that. Next, now for sale of goods, sometimes you will give some advance for goods and services. Let's say for school fees you paid advance, balance you will pay after the first semester or after the first year, first 6 months of school. That time they are saying the advance paid should be apportioned within 6 months. Okay, I'm sure you know this point. Advance paid should be apportioned within 6 months. That means first entry, bank account debit to advance for sales, and second entry, advance for sales to sales. These two entries should be adjusted within 365 days. Same way for capital goods. Sir, I am buying immovable properties. Sir, capital goods I am buying house, etc. For buying house you have to pay advance. Correct? That house advance, immovable property also, what they are saying over there, they are saying you should adjust it as per the terms and condition that is there, as per the terms and conditions. Then they are saying for these 2 points alone, guys, this 365 days point and for capital goods, assume the seller loses the license to provide that, meaning I paid advance for buying some medicines. After that, that medicine company lost the license. Now he has to, That advance has to be refundable. Advance is refundable. So they are saying once the advance is refundable, once the money is due, I will wait for 15 days. So basically I gave advance for provision of service. Provision of service never happened. So now that money is due, that money is refundable, I will wait for 15 days. If within 15 days if money doesn't come, then that also is treated as a deposit. Are you following, guys? So this 15 days point is very important. Then last important set of points, any money received, mutual fund collecting money, chit fund or nidhi company. Mutual fund, chit fund, nidhi company, repeat with me, all these are not deposits. Any collective investment scheme or real estate infrastructure trust also is not a deposit. Next very important point, if a startup is receiving more than 25 lakhs from a single person in a single tranche, then this is not deposit. Okay. But if startup is receiving less than 25 lakhs, it becomes deposit. Or startup is receiving from single person in a single tranche. Sir, I am getting, let's say, 5 crores, but I am getting daily 10 lakhs. Then it becomes deposit because it is less than 25 lakhs. It has to be more than 25 lakhs from single person in a single tranche. If these points are met, it's not a deposit. If the money is coming for debt, it should be repayable within 10 years. If the money is coming for equity, guys, if the money is coming for equity, then it will remain as equity, but it should be received more than 25 lakhs from a single person in a single tranche. Sir, I'm getting 1 crore, but I'm getting it 50 lakhs, not deposit. But same 1 crore, 10 lakhs in 10 installments, it becomes deposit from single person. Okay. Are you following, guys? So we saw what is not a deposit. Idea is to ensure that, okay, all these points have we covered. Next, penalty. If you don't follow provisions of this chapter, there is going to be penalty. Go through that penalty, crores, imprisonment, etc. Now coming to main summary table. Sir, what is the percentage? Who can issue how much deposit percentage from whom? This is the main one. Private company from public not allowed because private cannot get from public. Sir, private from members, how much, sir? They can get 100%. 100% of what? I will brief it in some time. They can get 100% of something. What is that something? I will tell you in some time. Okay. Sir, next to what about public company? Public company is classified into two, non-eligible and eligible. If it's a non-eligible public company, you are not eligible to get from public. So from public, you cannot get. But from members, you can get 35%. 35% of what, sir? I will tell you in some time. Next, eligible public company can get from public. The eligible from public is maximum 25%, but both put together should be 35%. And for that reason, because this is 25, from members I can take 10%. Internally, I can do any composition mix, but in such a way, this public should not exceed 25%. Are you getting it, guys? I can even have 30 here and 0 here, 33 here, 2 here, but I can't have 30 below. In bottom, I can have only 25, so above will be maximum 10. So eligible company from public eligible, how much they can get, guys? 25%. So from members, they can get 10. Sir, what about eligible government company? Eligible government company can get 35% in any ratio. That means eligible government company alone, the curious thing over here is from public they can get 35%, from members they can get 0%. So eligible government company 35% in any ratio. Eligible public company, public 25, but overall is 35. Is that clear? Are you understanding, guys? Okay. Sir, all this percentage, it's a percentage of what, sir? All these is a percentage of paid up share capital plus free reserves plus securities premium. It's a percentage of paid up share capital plus free reserves plus securities premium. Are you all following, guys? Now I'm discussing key provisions. Sir, what is eligible company? Eligible company has to be from this dabba. I'm discussing key provisions, guys. So in this, it's a percentage of paid up share capital plus free reserve plus securities premium. Now eligible company, if you see, guys, it is a public company. Net worth should be 100 crores or more. Turnover should be 500 crores or more. Any one, if I satisfy, it's enough. Very important. Eligible company 100 crores or more. Net worth and turnover 500 crores or more. Anyone should be satisfied, and company should pass the necessary resolution over there. Sir, ordinary resolution will be passed if it's for one limit. Beyond that limit, now we will go for special resolution, guys. What is that limit? Limit is not in this section. Limit is section 180, which is not in our syllabus. So you don't have to worry. So important, eligible is a public company with a net worth of 100 crores or more or turnover of 500 crores or more. Next. Okay. Here I told you, these are all key provisions. I told you private company can maximum issue 100% of, that means they can get 100% of paid up share capital plus free reserves plus securities premium. Imagine if paid up share capital is 100, free reserves is 30, SP is 20, then shareholders funds totally is 150. A private company can maximum issue deposits only up to 550. So private company can issue deposits maximum up to how much, guys? 150, yeah. Private company can issue maximum up to 150, 100% of this. But in some cases, private company can go beyond what, guys? 100%. There are some 4 exceptions. Now these same exceptions, what is that? If it's a startup company, in the first 10 years of incorporation, they can go beyond 100%. And any other any other private company satisfying these limits, they can go beyond, guys. What are these limits? The same exception is there now in section 76, what we are seeing now, and same thing is there in section 67 also. It's same provision, double concept. What is 76? Sir, how to accept deposits beyond 100%? These are the provisions. In 67, financial assistance given to employees. Financial assistance given to employees. A company cannot give loan to employees and other things. Those provisions are not applicable for a private company if they fall within these 4. Are you following? Is that means a private company can give money to anybody to buy back its own share if these conditions are met. What is it? It's not an associate or holding or subsidiary of any other company. It's not associate, holding or subsidiary of any other company. Are you following, guys? Next, it has not defaulted in repaying borrowings or filing of annual return. This basic default. And borrowings should be less than 2 times paid up share capital of 50 crores, whichever is less. I'm again repeating, guys. The borrowing should be less than 2 times the paid up share capital of 50 crores, whichever is less. How to compute this? Take the paid up share capital and take the borrowings. Sir, borrowings is for me 30, sir. Paid up share capital is 20. What is 2 times paid up share capital? 40 or 50, whichever is less, which is less, 40. I will compare with this 40, 30. Borrowings is less than 40. Therefore, I will proceed. Basically, debt equity ratio. Are you following, guys? Now, these are key provisions. If those who studied our class will know, we are done with our key provisions and deposits. At least read these and go. Now, coming to some common notes. Some common notes over here. Tenure of deposits. One more important tenure of deposits and other common points. Each of these common notes are standalone concepts. Standalone concepts applicable for deposit of public company, deposit of private company, or of eligible company. Same for all. First, deposit period is minimum 6 months, maximum 36 months, 3 years, maximum 36 months tenure. Sir, can I go for short-term deposits? Yes, you can go for short-term deposits for any of the above percentages. For any of the above percentages, the short-term deposits percentage should be only 10% of paid up share capital plus free reserves plus securities premium. But for this 10% of deposit can be only for 3 months to 6 months. Let me repeat, guys. Overall is deposit 6 months to 36 months. Short term up to 10% you can go 3 months to 6 months in case of emergency. So once an investor comes and makes deposit, I have to make entry in register of deposit within 7 days, and I have to give him register of deposit. I have to give him deposit receipt within 21 days. Once when an investor comes, I will register of deposit is 7 days. I will give him deposit certificate receipt within 21 days. Okay, sir, now I am failure to repay within the above time. I have not paid within the above time correctly. Interest will be 18%. Okay, interest will be 18%. What is the maximum rate of interest I can keep to give my deposit holders? RBI will decide that. It is the same rate what is given to NBFC for acceptance of deposits case. So register of deposits is maintained for how many years? 8 years. Basically all registers in Companies Act, register of deposit, register of members, everything is maintained for 8 years except 2 things which is maintained permanently. Minutes is maintained and register of charges is maintained permanently. Next, sir, there is important thing. I have to file DPT3 deadline every year. Details of all deposits that year should be filed before 30th June of every year. Next, no right to alter. Of course, once deposit is given, you cannot alter. Deposit trustee will determine. Premature of deposit. Sir, deposit is for minimum 6 months to 36 months. Now, before this period gets over, if I premature and close, then they are saying they will reduce 1%. So, if for the period what is already due. So, let's say I had deposit for 17 months and my interest is 11%. Now, you will still get interest for 17 months, but you will not get 11%. You will be getting only 10%. So, for the actual period, they will reduce 1%. However, they are saying, this has an exception. No need for reduction in interest. No need for reduction in interest if it is for emergency due to war, navy, military or air force, and for if they are taking that time, no need emergency. Or if it's for war widows, if that time if it comes mainly for emergency purpose, we will not take it. Emergency purpose, we will not reduce 1%. Or to repayment is because to maintain with prescribed limit. What do you mean by prescribed limit? Maximum deposit is 35%. Now, because of change in debt equity, this 35, let's say, has become 36% in the company. So, 1% mandatory I have to repay. Not your fault, my fault. Therefore, I will not reduce 1%. Are you following, guys? Next, deposit trustee disqualification. In debentures, we spoke about disqualification. Debenture trustee, deposit trustee, same disqualification. Director KMP, then of the company or associate or subsidiary or holding, then depositor of the company, indebted to company, material, there we had 2%, here we don't have 2%, material pecuniary relationship, guarantee or relative of the person, then deposit trust deed should be made. Are you following, guys? To remove him, the directors can remove him, that's about it, okay. Next, joint deposit. Sir, can I have joint deposit holders? Yes, maximum 3 members together can take joint deposits. MCQ question. Maximum 3 can take joint deposit. This whole chapter of deposit is not applicable for a banking, NBFC, housing finance and any other company specified, because a bank, NBFC, housing finance, or the main work is to give loans and collect deposits. You can't tell they have to follow deposits chapter, so it's not applicable. Then lastly, how do I invite people, like how a prospectus chapter has giving prospectus, here for asking people to give deposits, we issue something called circular or circular in the form of advertisement. How I will issue this, sir? I will publish in the newspaper and English plus vernacular language. I will also publish in the website of the company. So if my company is going for deposit issue, I will put in the newspaper. I will also put in the website of the company. I will also be sending in registered post with acknowledgement to all my members, to members if it's members. So I will send to my members in registered post acknowledgement, and I will put in the website, and I will put in newspapers, and I can send electronic mode also. Next, what they are saying, the circular should have some basic details like financial position of company, credit rating, all the terms of deposit, what is the period, what is the interest, the credit rating of company, secured or unsecured, is charge created. Remember one important thing, if it's an eligible company creating deposit with public, I'm repeating, eligible company creating deposit with public, you have to create charge, and the charge can be created only for tangible assets, only for tangible assets. But if it's for deposit with members, I can create charge with tangible or intangible, but deposit with public now, tangible assets only. Very, very important. Intangible not allowed. And then lastly, they are saying this circular, whatever I'm sending in post, website, newspaper, credit rating, etc., should be circulated at least, should be filed 30 days before with the following signatures to ROC. It should be filed at least 30 days before to ROC with signatures. Sir, what is the validity of this? Once I issue the prospectus, it's valid for 3 days, like that. Here, once I issue the deposit circular or circular in the form of advertisement, what is the validity, sir? It is earlier of this, either earlier of 6 months from closure of financial year in which it was issued. So if it's issued in 31st March 24, within 6 months from that year ending, or date of AGM, let's say AGM is happening on 30th September, or if no AGM is held, last day on which AGM should have been held. So basically they are saying you issue it anytime during the year, but it will be valid up to 6 months from end of that financial year, or when the AGM is held for that financial year. or whichever is coming early. Either 6 months is coming early na 6 months, or if AGM is kept in 3 months itself, then with that day, basically date of AGM it will terminate if AGM doesn't happen if AGM happens. Are you following, guys? All of you with me? Understanding? Clear? Hello? Okay, so with this we are done with deposits workout, guys. Thank you so much. Yeah. Okay, one more, just I know deposits just got over, guys, but one more quick point. We finished the whole deposit chapter, but one important point I missed out, so I'm just re-recording just for this one point. In deposits, what is not a deposit? One more point I want to discuss. Security deposit received from employee when he is joining or any other date. That deposit is not a deposit if it is not interest bearing, meaning company will not pay interest to him and it will not exceed the annual salary. That means if an employee's salary is 50,000 into 12, the maximum security deposit I can get from him is 6 lakhs, and for this there should be no interest. Then this is not a deposit. So either if interest comes or it crosses 12 months, then it becomes deposit. So with this we are pakka closing deposit, guys. Idea is we cover 90% of all the points are covered. Here and there 1-2 points missed out. Of course small things will be there, but I'm trying to cover maximum in shortest time possible. Thank you so much. Hi guys, let's do the GenZ revision of the big monster chapter, share capital and debentures. GenZ notes itself will run to about 7 or 8 pages. We will try to close this in less than 30 minutes for the whole chapter. Okay. First, it is from section 43 to 72. There are two types of shares. You all know, equity and preference. Equity has what advantage? Voting rights. And equity also, there is equity with differential voting rights. In preference, preference for what? Preference for dividend and preference in repayment of capital, and preference in surplus after distribution of all liabilities and capital. After paying capital, if I still have surplus, they will take it. This is section 43, kinds of share capital. 44, 45, not there in syllabus. Because I go in section number, I will just keep taking that way. Next to 43, 43 rule 4 talks about conditions for differential voting rights. Differential voting rights, today practically company can't do it, but it's still there in our syllabus. Simple. Always you start off any procedure with the approval that is needed. Approval, default in the company, approval that you need from members, from company articles and ordinary resolution in general meeting. Such a resolution you should pass in postal ballot method. Postal ballot method. Are you following, guys? After passing resolution, the post issue maximum DVRs in a company can be 74% of post issue capital. Are you following, guys? So AOA, ordinary resolution, maximum is 74% post issue, pass in postal ballot. Postal ballot will come if it's a listed company. Listed company, I have to do in postal ballot over here, but others also postal ballot only actually. Next, they are checking about some defaults. You should not have defaulted and not been penalized. Last 3 years, let me finish off, sir. I will split this into 3 years and 5 years. In last 3 years, no default in filing financial statement and annual return. And again in last 3 years, no default in RBI's, SEBI's, CRA and FEMA. Are you following, guys? So these are GenZ notes that we actually give in class, guys. Okay, I make students do it. And last 5 years, only 1 point, no default in all types of debt and equity. Look at this. What is debt? Deposits, equity, preference, dividend, no default, interest on deposits and debentures, repayment of loan, no default in basically principal and interest or repayment of preference and dividend or buyback. Okay, next, IEPF transfer should have been done correctly. If there's any IEPF transfer, they didn't transfer to IEPF also, this provision will come. Are you following? Next, other points what they're saying, these are base points. So approvals 3 years and 5 years. After that what they're saying, DVRs, next, existing shares cannot be converted to DVRs. Only fresh issue you should make. You can't do any conversion. And then you should maintain details of DVRs in a separate register called register of members. You have to maintain it. Are you following, guys? Then some more points I will add here. Company should also give an explanatory statement, section 1 or 2. Company should give what, guys? Explanatory statement as to why they are doing that. And also company should disclose in the board's report. Company should disclose what, guys? In board's report as to why we are doing DVRs. Are you following? So 1 or 2 is explanatory statement, 134 is board's report. All other rights about getting bonus, rights issue, all those other rights are pari passu. So there are 3 more points I will add over here. So separately, these are the points, guys. Are you following, guys? So these are the points for DVRs. Can you recollect, guys? 1 or 2, 134 explanatory, board's report and all other rights should be pari passu. Next, to proceed, section 46, share certificate. Share certificate is mandatory. It can be signed using person authorized or with common seal. Who has to sign this? Just like what we saw in section 22, authentication of negotiable instrument. If company has common seal, I will sign using common seal. If common seal is not there, CS plus director, CSA ilana 2 directors. Are you following, guys? One person complain, if one person signs, it's enough. This is section 46, share certificate. 47, voting rights. You tell me. Equity shares, one share is one vote. DVRs can be different. Preference shares, can they vote? No. But they can vote in case of, if it's going to affect their rights. If it's going to affect their rights, they can vote. Or, if dividend is not declared for 2 years, 2 years I didn't give dividend. If it's a cumulative preference share, then they can vote on all resolutions. But even if dividend is declared, dividend not correct kudutana sir, okay, they can still vote on winding up and reduction of capital because that's going to affect their rights. So basically they can vote for anything affecting their rights. What's going to affect their rights? Winding up and reducing capital, so they can vote there. Dividend not paid for 2 years, they can vote on all resolutions. This is section 47. Are you all with me, guys? 43 to 47 done. Next is 48, variation of shareholders' right. If you want to vary any shareholders' right, first I told you always source. MOA and AOA should provide for the same. If it is not provided in MOA, at least the terms of issue should not prohibit the same. Are you following, guys? So MOA or terms of issue should provide for the same. Now that approval is there, sir, source of power is there. How to do variation? Very simple. They are saying for doing the variation, first you have to check if it's affecting only one class or if it's affecting more than one class. If it's affecting only one class, yeah, okay. So they are saying, sorry, affecting other class. This other class affecting only that one class. If it's affecting only my class, then consent of 3/4 of members of that class or by passing a special resolution. So if it's affecting only my class of shareholders, 3/4 of consent or by passing a special resolution. If it's affecting other class, sir, then additionally apart from this, consent of 3/4 of members of such other class should be obtained. So my class now it's going to be 3/4 and special resolution. If it's affecting some other class, then I have to get the permission of other class also. In book it will be used as 75% both in value. Are you following, guys? Now if somebody is having dissenting shareholders, they are not happy with this. Rights of dissenting shareholders. One shareholder, I can't do anything. You need at least 10% of dissenting shareholders. Such 10% of dissenting shareholders can apply to tribunal within 21 days and tribunal will pass an order. That order you have to file to ROC within 30 days. Are you following, guys? Very simple. So dissenting shareholders 10%. They have to appeal within 21 days. Once the order is passed, you have to intimate ROC within 30 days. Whatever tribunal is passing, that is final. This is section 48. Are you following, guys? Next, 49 came for 5 marks once. Very small section. Calls to be made on uniform basis. Section itself gives the answer. Meaning, if I am making a call to a particular class, I have to call everyone to make the call money payment. I can't ask specifically only Vishnupriya you pay or only other person pay. Everyone should make the payment. Otherwise, don't call itself. Next, calls in advance, you know. It's optional. If company wants, a shareholder wants, he can pay. Now, for the excess, will he get voting rights? No. For the excess, will he get interest, sir? Interest can be maximum. Not maximum. Interest can be 12% as per articles. But I can remove this. I can make it 0 also. It's only optional as per company's choice. This is section 50. What is section number 51? Payment of dividend. Sir, I have shares of rupees 10 each. Face value. Paid up value is 8. Dividend will be paid on face value or paid up value? At the option of the company. So you can pay in face value, here I mean is nominal value. So dividend can be paid on nominal value or paid up value if articles authorize. That means company's option. So default nominal value, but I can also pay on paid up value if articles is going to authorize. This is section 49, 50, 51 related to your calls in advance and calls in arrears and dividend over there. Next is section 52, guys. Exam porthodukku 52 is simple. If they ask you, they will ask you straightforward question. What is the usage of securities premium? 5 points, 5 marks. You will be lucky if that comes. They can use for buyback and bonus, and you can do write off of 3 things. Writing off preliminary expense, writing off commission or discount allowed at the time of issue of shares or premium on redemption of preference shares and debentures. How to remember? Buyback bonus. Then one is preliminary expense. Then at the time of issue of securities there is discount and commission at the time of issue, at the time of redemption preference, at the time of redemption premium. Are you getting it? At the time of issue of securities, at the time of redemption, whatever cost comes, preliminary expense, buyback and bonus. Are you following, guys? This is section number 52. 53 next says, can I issue shares at discount, guys? No. It is issuing at discount is void. But beyond that, I like to do only void things, sir. I am issuing at discount. Then you have to pay interest at 12% for the entire period in which you collected the shares. There is no grace period. From the entire period you have to pay. Exception is what, sir? 53 or exception is 54. Sweat equity shares can be given for discount, or if it's for a scheme with creditors, debt reconstruction scheme under statutory resolution plan. Basically your internal reconstruction chapter, but don't try internal reconstruction here. Debt reconstruction scheme under statutory resolution plan with court approval, then I can go issue at discount. Sweat equity shares, again we have procedure, guys. Follow. Sweat equity shares, always I start off with approval, guys. That's make it a habit. What resolution? Special resolution should be passed. That is valid for 1 year. Why, sir, it's valid for 1 year? In that 1 year I can give to any employee. To whom I can give, sir? Employee or directors. Now I don't want to give restriction. Anybody can be smart. I can't tell only people in Chennai are smart, people in Bangalore are smart. So they can be located in India or outside India. Such employee or director can be holding companies or subsidiary. I can give the ESOP to my holding company's director also, because he only was the brain. Are you following, guys? Clear? So you know approval. Special resolution valid for 1 year. Keep repeating with me. What are you all looking at me repeating? I can give for employees in India or outside India, holding or subsidiary. Once you give, lock-in is for how many years? 3 years. Percentage, I can maximum give for 15% in one financial year or 5 crores, whichever is higher. But overall, lifetime should not cross 25%. So in a year 15%, lifetime 25%, startup company now 50% of paid up share capital can be given. Are you following, guys? Clear? Again, here some points we have. Company has to have, give explanation, 1 or 2, why we are doing this. 134, and also I have to maintain section 88 register. These 3 points will repeat 43 rule 4, and here points are going to repeat. What are the points that's going to repeat, guys? Explanatory statement is 1. 88, register of members details should be given and both reports should be given. Are you following, guys? Then additionally we have one more point. Again, this point also is repeat from previous. Rank pari passu with other shares. That means all other rights for employees like bonus, dividend will be same as other shareholders. Are you all with me, guys? Hello. Then additional 2 more points. There should be valuation report given by a registered valuer for giving at discount, and they are also saying company has to follow guidance note on ESOP. Here and there 1-2 points missed. I remember now, I'm writing it. Are you following, guys? Okay. Company has to follow what, guys? Guidance note on ESOP. So look at this. ESOP law, what are the new common points from DVRs? 88, register of members. 1 or 2, explanatory statement. Board's report, disclosure, and pari passu. These 4 points are coming in 43 rule 4 DVRs, and it's coming here. Additionally, what are the new points beyond limits, sir? Valuation report by registered valuer and guidance note on ESOP should be followed by company. This is section 54, sweat equity shares. Are you following, guys? Next, 55 is issue and redemption of what, guys? Preference shares. So we talk about issue, we talk about redemption. Repeat with me, guys. For again, we start off with power. For issue, articles should authorize. You should additionally pass special resolution, and no default should be there. In what? Previously paying any repayment. Previous dividend, there is no default. Previous redemption, there is no default. Are you following, guys? And section 88 means register. Company has to maintain register when they're issuing. Period of preference shares is 20 years. Infrastructure now 30 years. Are you following, guys? This is for issue, guys. Sir, what about redemption? Redemption can be done out of free reserves, fully paid up, and sources, fully paid up shares, free reserves, fresh issue, or CRR can be used. Are you following, guys? For redemption, they are trying to say I can use my existing reserves, free reserves, or I can do a fresh issue and pay. And they are also saying whenever you are doing redemption, the face value of amount redeemed should be transferred to CRR, but this will come only if you are using my reserves. If I am doing redemption from reserves, I will transfer to CRR. Sir, if I am doing redemption using fresh issue, then no need to transfer CRR. The idea is, if paid up share capital is decreasing, to the extent of decrease, I will transfer to CRR. If there is no decrease, it will remain as it is. Are you following, guys? Clear? Next, premium on redemption. Premium on redemption is there, correct? 100 rupees share, I am repaying at 120. That extra 20 premium, can I adjust with securities premium? Answer is no. You can't use securities premium. You should use only free reserves. Here it does not include securities premium. Are you following this? These are accounts points, not law. So what is the sources? Sources, free reserves or fresh issue. Then if you are using reserves, you will transfer to CRR. Premium on redemption, you cannot use securities premium. All of you with me, guys? Sometimes if company is not able to redeem, then I will pass an entry, old preference shares to new preference shares. That's called deemed redemption. I am not paying money. It's a book entry. For doing that deemed redemption, I need to get permission of 3/4 of the preference shareholders in writing. I need to get 3/4 consent in how, guys? Writing I have to get, and I should get approval of tribunal. Double approval, guys. Sir, what is deemed redemption? Very important. Irkira preference shares come again giving preference shares. Preference shares to preference shares. 3/4 in writing, and tribunal should pass an order. If there are dissenting shareholders, throw them out. Give them exit opportunity. Are you following, guys? This is transfer and transmission. Issue and redemption. This is the biggest chapter. This will take a lot of time because procedures will keep coming over here, guys. Next, transfer and transmission. Little less important for exam, but we will quickly run through, guys. If you want to transfer shares, the transferor of the company who wants to transfer to transferee, he has to submit to the company a transfer deed within how many days of execution, guys? Within 60 days of execution. Sir, can I go beyond 60 days? Yes. If you want to go beyond 60 days, you have to give an indemnity form. This transfer deed will be signed by both the parties and duly attached with a letter of allotment or share certificate. Share certificate proof or letter of allotment with the share transfer deed, we will sign and give within 60 days of signing. That's called execution. Beyond 60 days, now you will give something called indemnity form. Are you following, guys? Clear? Once you send it to company will cross check with you if I have to do allotment. When company will do cross check, company will send notice to check, can I do the allotment and transfer? Only if the shares are partly paid up, because I'm going to create a liability for somebody else. If it's fully paid up, the company will not cross check. They will go ahead and do the allotment. This is section number 56. Next to 57. Sir, I am not the shareholder, sir, but I am acting as if I am the shareholder because my name is same. I put some makeup and I'm going and saying I am only that person, creating fake ID. That's called personalization, or trying to behave as if you are not, trying to impersonate somebody else. For that, enjoy the penalty, go to jail. Okay. Next, 58, guys. 58 talks about you want to transfer the shares, but the company is not letting you transfer for whatever reason. Refusal for registration and appeal against refusal. So, we have to file to company within 60 days above. We have to file within 60 days. After you give to company should intimate to you within 30 days if they are going to do transfer or not. Are you following, guys? So company has to intimate within 30 days. If not within the next 30 days, you can go ahead and do the appeal. Are you all with me, guys? So let me explain that here. See, company has to tell you within 30 days. Within 30 days, they have to tell you, am I going to register or I am not going to register? If they are not registering within 30 days, then within the next 30 days, you can appeal. That means totally you have 60 days, correct? So if I have to put the timeline, simple timeline, look at this. From the date of transfer deed, you have to file within 60 days. After this, company should tell you within 30 days. If not, within the next 30 days, you can go and do the appeal. First 30 days, they should tell you why they are doing refusal. That's why both read together, you have 60 days from the date of submitting the transfer deed. Are you following, guys? From your submitting transfer deed. Same thing if it's for a private company, guys. If it's for a public company, it will be 60 and 90 days. 90 days. That means what they are saying, if it's a public company, this 30 will become 60. Therefore, this 60 will become 90 days. Are you following, guys? So company should reply within 30 days, but I have time for appealing 60 days to appeal, and overall 90 days from the date of filing it. Are you following, guys? All of you with me? Hello? Clear? Okay. Next. If at all, then tribunal will pass an order. Once you pass appeal to tribunal, they will pass an order, and that order they will tell to do something. The company has to do it within 10 days. Within 10 days, company has to do it. Are you following, guys? Next is section 59. Rectification of name of in register. My name is Karthik, but in register they put Karthik with some wrong spelling, 2K, whatever. Or intentionally company is not putting my name. Whatever the reason, if the name is delay in entering, omission, wrong name, you can apply to ROC for company for rectification. If company is not changing, now your aggrieved party, the aggrieved party can appeal to tribunal. This talks about rectification of name and appeal. And then you can appeal, and then tribunal will pass an order. That order you have to follow. Are you all with me, guys? Clear? 60, not in syllabus. 61 is alteration of share capital. What are the alterations I can do? Increasing authorized share capital, or stock split, or subdivide. 1 lakh shares of 10 is going to become 10 lakh shares of 1. Next, consolidation of shares. 1 lakh shares of, let's say, 1 is going to become 10,000 shares into, 10. Are you following, guys? Consolidation, conversion of share into stock, and cancellation of unsubscribed shares. This is alteration of share capital. For doing all of this, you have to pass ordinary. But if you want to do authorized capital increase alone, you have to pass special resolution, because this leads to alteration of MOA. It leads to alteration of MOA, so special resolution. Are you following, guys? Whenever you do increase of authorized share capital, MOA is changing. If you do redemption of preference shares, again MOA is decreasing. In these cases, within 30 days, you have to intimate ROC, that is section number 64. So whenever I increase authorized capital or do redemption of preference shares, I have to intimate ROC, add-on points. Following, guys. Now remaining all are big procedures. I will quickly run through, guys. Section 62 talks about rights issue. What are the key points for rights, sir? First, always approval. Board resolution and special resolution. You have to pass board and special for rights. Then, once you give the offer, once I give a letter of offer, the other party can accept or reject. Correct? For him to accept or reject, I should give minimum 7 days, maximum 30 days. Within this time limit, I can choose. It's not 7 to 30 days. I will tell 10 days, 12 days. Time to reply should range in 7 to 30 days. In that time, he can accept, reject, or renounce. That renunciation can be done either to existing shareholder, or it can be done to other shareholder also. Renunciation not mandatory to be done to existing shareholder, can be done to any person. Then, if there are any unsubscribed shares, sir, everybody rejected, nobody bought the shares, that should be disposed of by the company in a way which is not disadvantageous to shareholders. Meaning, I gave you rights offer for 60 rupees, sir. Since all of you are not buying, only some of you bought, and now I will give to somebody else for 40 rupees. That's disadvantage for you. Are you following, guys? That's all about rights. Now you want to give the same rights further issue to employees, means you can do that if the company is only in existence for 1 year. All the other points, just like 54, you have to follow section number 54. Okay, are you following, guys? Yeah, so 54 points will again come over here. Look at this, board and special resolution. Then company will have the same, registration of ESOP, then explanatory statement. These are pretty simple points, guys. Like, see, for giving to employees, additional points on death. Basically, I'm giving employees option. So if employee dies, then the option will be vested immediately. This is not that important, guys. Come back. 62 subsection 3. We are still in 62. If company takes loan or debentures, if the same is not repaid, then the same will be converted into shares. Will be converted to what, guys? Shares. But for that, company at the time of issuing debentures or issuing the loan, they should have passed the special resolution to get permission of members for such conversion in the future if there is going to be a default. Are you following, guys? Same section 62 subsection 456 is saying what? If I take loan or debentures from the central government, and if I did not repay, the central government can convert such loan into what, guys? Equity. Are you following, guys? Now here the very important point is they can convert this loan into shares, not just in case of default, even if company is paying, but if company is acting against public interest. Company is acting against public interest, against the public, then central government can still order, no need to pass any special resolution. Look at the difference above. For debentures and loans, you need to pass SR before issue, then only you can convert. When I can convert? Only if there is default. Here, nothing like that. If I have taken loan debentures from central government, no resolution passed, it's okay. You are going against public interest, I can convert to shares. Not fair, no. That's why the aggrieved party, they can appeal to the tribunal. They can appeal to tribunal, guys. Within how many days they can appeal? Sure, I just check 60. Booklet 60 only is given, no? Sure, I just have small note. Yeah. So appeal within 60 days. See, wherever I am not convinced, I will check, guys. 60 days you will appeal. If they are not satisfied, they can appeal to tribunal within how many days, guys? 60. Sure, Reshma, 60 only is there. Fine. Then pakka, you can appeal within 60 days. Clear, guys? This section 62. Next section 63 talks about what, guys? Bonus issue. Very simple. Again, approval. You need authorized by articles and recommended by board. What resolution, sir? Ordinary resolution. Now this bonus will be given from what source? Basically, what is bonus? Conversion of reserves into share capital, capitalization of profits. So which reserve I can convert, sir? I can convert, free reserve, securities premium or CRR. Which to use first? First CRR, then SP, then free reserves. Are you following, guys? Sir, but I cannot do bonus, sir. I cannot do bonus if there is default in payment of deposits. Deposits, there is default, or statutory dues of employees like PF bonus is not paid, then you cannot make a bonus issue. Sir, what are some other points, sir? Once you committed, once you made the resolution, once you make a promise, honor that promise, try your best to honor, guys. So once issued, it cannot be withdrawn. Then last two important points, I can't tell the shareholder, hey, I will give you dividend. Instead of dividend, I can't give you bonus. So bonus cannot be given in lieu of dividend. Dividend sonna give dividend. Bonus sonna give bonus. I can't interchange both of them. Last very, very important point, bonus shares should be issued only for fully paid up shares. If I have partly paid up shares, I have to convert them to fully paid up shares. There's an amazing logic for this, why I should make the conversion, but that's about it. Are you understanding till here, guys? So partly will be converted to fully paid up. Fully paid up shares only I should give bonus. Otherwise, if it's partly paid up, your partly paid up will double into two partly paid up. Liability also will double. That's the logic, why they are not allowing for partly paid up shares. This is section 63. Now coming to 64. 64 is basically in 3 cases within 30 days you have to intimate ROC for change in share capital. 2 I already told you. Alteration of share capital 61 subsection 1. Authorized share capital has changed. Or central government loan. Just now we saw 62 subsection 4, 5, 6. Central government is converting loan debentures to equity, increasing the authorized capital, or redemption of preference shares, you have to intimate to ROC, because all these 3 leads to change in MOA. Sir, how, sir, central government conversion leads to change in MOA? Even if company is not having authorized capital, such conversion is deemed to convert authorized capital. Sir, company is having loan of 100, share capital is 100, authorized share capital is only 150. Okay, only 150. Now if I convert loan to capital, capital becomes 200, but authorized is only 150. Such conversion is deemed to increase the authorized share capital because central government is doing it. Are you following, guys? This is section 64. 65 not in syllabus. Next we will proceed. Let me do one small section 69 just to quickly close this. 69, what they are saying, in 2 cases you have to transfer to CRR. One, in case of buyback of equity shares or redemption of preference shares. In both cases, capital is decreasing. How much I will transfer? I will transfer only amount equal to nominal value, face value, if it is done out of free reserves or securities premium. SP allowed only for buyback. Sir, if I am doing from fresh issue, no need to transfer to CRR. Are you following, guys? In this, sums are there in accounts itself. Now, before I go to reduction, let me go to buyback. Buyback, let me go, guys. 68. Now we have only 2 concepts. Buyback and related provisions and reduction of capital. Both are separate. In both, company's capital is decreasing. But in buyback, company is voluntarily giving it back because I'm a profitable company. In reduction, company is a loss-making company. Company kita kaase illa. I'm begging you to sacrifice. There's a huge difference. Profit to loss. First we'll do buyback. Now look at buyback. We'll start off, guys. Now if I come to buyback, first I've just given it, this one alone I've given in terms of timeline. See if you're understanding, guys. First, always I tell you, start off with power, resolution. Onnu pandradhukku you need power in life. So here, if for doing buyback, if I do board resolution, you can buy back how much, guys? 10% of paid up share capital and free reserves. If I do special resolution, you can do buyback of 25% of free paid up share capital and free reserves. Very, very important to note. Only for this section, I repeat, only for this section, free reserves includes securities premium. In this section, I will treat SP as free reserves. That means redemption of preference shares. You can't use SP. Here, I can use SP. Why, sir? Logic. We see in regular class. But what is the logic? Who gave SP? Equity shareholders gave us the SP. Are you following, guys? Clear? All of you with me? Hello? Okay. Next, once I pass resolution, now follow, guys. Once I pass the resolution, the buyback should be completed within 1 year. That means from the start of end to end, look at this. From the start to end, completion of buyback from the date of resolution, it should all get over within 1 year. 1 year time limit. In this 1 year time limit, what they are saying, I can give the offer anytime, guys. I can give the offer anytime. In rights for members to accept the offer, they have minimum 7 days, maximum 30 days. Minimum 7, maximum 30. Yeah. Here minimum is 15, maximum is 30. Sir, I want to reduce below 15, sir. Rights to 7 you are allowing. Here I want to reduce below that. Okay, you can reduce by passing a unanimous resolution. You can reduce it less than 15. Are you following? In the one point exam la 5 mark 15 days how to reduce unanimous resolution. With this, buyback is done. Within how many days, in this 15 to 30 days gap, you have to reply for offer. Buyback should be completed within how long, guys? 1 year. 1 year from resolution. After completion, there are 4 timelines. After completion, I have a 3 days timeline, I have a 7 days timeline, I have a 6 months, and I have a 1 year timeline. What is that? After buyback is done, within the next 3 days, you have to file return of buyback to ROC. Whose shares I bought back? What are the details? Within next 7 days, destroy the share certificates and put it in the dustbin. Are you following this? Destroy it, you will properly destroy it. Today, DMATs, computer, those days I will destroy it. Within next 6 months, you should not make an issue. They are saying, are you a fool? Just now you did buyback. Now you want to make fresh issue. Buyback you repaid. Again you want to make fresh issue. Have some sense. So next 6 months you should not make fresh issue. For this, what is the exception, sir? Fresh issues allowed for ESOP, bonus, convertible shares or convertible debentures. Why, sir? Logic. In these fresh issue, I am not getting money. ESOP is for employees, different purpose. Bonus is giving for free. Convertible, I already committed long back. Allow me to do my old commitments. Are you following? Another 6 months. Sir, next to 1 year, no new buyback. Just now I finished buyback, no buyback again. Just now you got married, no. Wait for some time. That's what they're trying to say. Are you understanding, guys? So next to 1 year, you can't do any buyback. So let me just summarize the time limits of buyback because it's one of the biggest procedures that we have, guys. Very quickly, you will participate with me. Resolution, 10%, board for 10%, special for 25%, of paid up share capital and free reserves, including securities premium. Recording, tell me with me. Once you pass resolution, buyback should be done within 1 year. In that 1 year, I will give offer. You have to accept within 15 or 30 days. Less than 15. Unanimous resolution. Excellent. Once buyback is completed, you have deadlines. 3 days. Return of buyback. 7 days. Destroy share certificate. 6 months. No new issue except ESOP. Bonus. Convertibles. Next to 1 year, no buyback should be done. Are you following, guys? Then, so that means in 1 year, we have 3 1 year points in the same provision. One question, 3 1 year points. So I summarized all the 1 years. Complete within 1 year of resolution. And next 1 year, no buyback. And in case of a listed company, they have to file something called declaration of solvency. Declaration of solvency signed by a CA that for next 1 year, company will remain solvent. Are you following? This company will remain solvent in case of a listed company. These are what we have in law. Now, what are the famous accounts points? Accounts points is this 25% and 10 points, 10% will come over there. Additional points. How many shares I can buy back, sir? 25% of number of shares outstanding, and debt equity ratio post buyback should not exceed 2:1. These 3 points anyway you learn in advanced accounting. So by the time you come for law exam, nee padichirpa accounts la. Accounts you padikala sir. Accounts 8 marks gone. Law also I didn't study sir. 5 marks gone. See you in the next attempt. Okay. Now are you following guys? Clear? What are the 3 conditions? The resource test la 25% I will take or 10% depending on resolution. Number of shares, 25% of number of shares outstanding, and debt equity should not exceed 2:1. Are you able to recollect fully guys? Hello? Understanding? Clear? Next, with this we are done with buyback. Now there are 2 protection of section 68. Okay, what they are trying to say, you section 70 after 68 70 says you still cannot do buyback indirectly or directly. Company cannot do buyback. How sir? I am not doing buyback sir. My company shares my subsidiary is buying. I am not doing buyback sir. My holding is doing my buyback. I am not doing buyback sir. My investment company is doing my buyback. Like that they are saying directly or indirectly you cannot do buyback with your own subsidiary or through an investment company you use panni you cannot do buyback. Then if company has the following defaults, you are not able to repay deposit interest, redemption of preference shares, repayment of dividend, repayment of loan. All these if you are not able to do, then don't do buyback. If you have these defaults, then for the next 3 years, how many years guys? Next 3 years buyback cannot be done. You have to rectify that. Are you following guys? And if you have default in section 92, filing annual return, 123, dividend declared, not paid, 127, penalty, dividend not paid in 30 days, 129, FS is not prepared, 137, filing of FS. If these things are also not complied, sorry, buyback cannot be done. Additional conditions in buyback. Next is section 67, another, what to say, extension of buyback. No company, private or public, can give loan to somebody to buyback. So, look at this. ITC wants to do buyback. They are giving loan to SBI. ITC is giving loan to SBI to buyback. SBI is buying shares of ITC. Now, later to get the loan back, instead of getting, no, SBI should repay the loan. No? Instead of repaying loan, they are repaying. Instead of repaying loan, they are repaying the shares of ITC. So, I gave loan, but when I am getting the money back, I am not getting loan. I am getting my own shares. Are you following guys? Got the scammer? Like this they are trying to say, no company, public or private, should not give loan or guarantee or security or any other financial assistance to anybody for buying my own shares. Are you following guys? Because if I give loan or security or guarantee, when I get it back, what you will tell? Give my shares. It becomes buyback. So asset side, when I get my loan back, I am getting my own shares. Liability asset. Are you getting it guys? Not allowed. They are saying restriction. You cannot give loan or guarantee or security to anybody else for you to buy back your own shares. But this has 2 very, very important exceptions guys. You can't tell a bank not to give loan. Bank or work is to give loan. I can take loan from SBI and buy SBI shares. How can bank control? So for a bank in the ordinary course of business, they can give what guys? Loan can be given. And employees, very important for exam, a company can give loan to employees. Employee can do whatever he wants. He can even buy shares of the company. But they are saying such loan can be given for other than KMP or directors. Other than KMP or directors. And that loan shall not exceed the salary of last 6 months salary. And when employee is buying back the shares of company, he can buy back, but he should only buy back fully paid up shares. Beautifully drafted provision guys. Why not partly paid up shares here? Employee will buy partly paid up. I will give him loan. I will take it back in terms of call. Partly paid up shares, I will give him loan. He will buy partly paid up shares. Then I will make call. He will give the money back to me. Look at the route. So to avoid all this, whoever drafted told, I can give loan to employees, but not allowed for KMP and directors. Why they need loan? They are already very rich. Don't give loan to them. And for buying back, and they can purchase only fully paid up shares, and maximum loan you can give them is how much guys? 6 months order salary. Are you following guys? This is section number 67 and 70, prohibition and restriction on buyback. For doing this, for giving loan to employees, you have to pass special resolution in general meeting, and employees can buy in terms of ESOP also, they can buy. For this again, company should not have defaulted in repaying deposits. Okay. Next, last one, 66, reduction of share capital. Sir, what do you mean by reduction of share capital? 10,000 shares of 10 is now becoming 10,000 shares of 5, fully paid up. I am reducing the face value itself fully. So when you are doing reduction of share capital, what they are saying, very simple. What this reduction is explained over there. Okay, that is fine. Basically, or they will adjust, for example, company in balance sheet. Look at the balance sheet. They will have 10,000, 1 lakh shares. Okay, or 1,000 shares. Reserves loss is 100. I will set off both and tell my new capital is 900. Instead of showing 100 loss, I will set off my reserves loss with my share capital. Instead of showing 1,000 positive, 100 negative, I will show 900. For all these comes under reduction, sir. Sir, what is the procedure for reduction? Very simple. You have to apply to the tribunal. Once you apply to the tribunal, again what resolution? I will start off with resolution, sorry. Board and special, and then tribunal vandale pass special, go to tribunal. Tribunal will forward the application to other concerned stakeholders, guys. Who are the concerned stakeholders here? Central government, SEBI, ROC and creditors. It will go to all these people to send their representation. Within 3 months, I will wait for 3 months if they have any objection. So to whom I am sending for objection? Guys, I am sending for central government, SEBI, ROC and creditors. And they have to wait for objection for 3 months. Now this creditors should be a latest list. Should be a latest list of creditors of last how many days? 15 days. The list of creditors to whom I am sending should be latest creditors in last 15 days. And I will wait for 3 months. If there is no objection, I will proceed and go ahead with what, guys? Reduction in 3 months. If there is objection, every time objection comes, company should try and rectify within 7 days or longer period. That's about it. Are you following, guys? Once the reduction order is coming, you have to publish in newspaper also and website, all of that. Are you following, guys? Clear? Effect on members and creditors. What is this, sir? Look at this. Effect on members. Now they have new liability. 10,000 shares of, let's say, 10 each is now becoming 10,000 shares of 5 each or 3 each. Now new liability comes. Effect on creditors. Creditors, main point over here. If some creditor's name is missed out in this list of last 15 days, then they can still come and claim. They can still come and claim from the company. Company is closed down, sir. I will claim as if the company is still open from those shareholders who were supposed to pay. Are you following, guys? Clear? This is section 66, which talks about reduction of share capital. With this, we are done with full share capital provision, guys, from section 43 to section 70 is fully done. What is left is debentures, which is 71, which we'll be seeing next. Okay, let's get into the GenZ revision of debentures chapter, guys. We just now finished share capital. Quickly, I'll ask like questions, you will tell like answers. Can debentures have voting rights? No, debentures will not have voting rights. If I am going to issue convertible debentures, converted to shares in the future, you can issue them. But additionally, you have to pass special resolution at the time of issue itself. Why, sir, I should do that? Because they are going to become shareholders in the future. Apart from that, if you want to issue any other debentures, including secured debentures, you have to follow the following points, guys. Secured debentures, first you have to create a charge on the asset. But if it's a government company issuing debentures where it's guaranteed by central or state government, no need to create a charge because government guarantee itself is the security, guys. Next, the redemption period. The debenture should be repaid maximum within 10 years. But if it's infrastructure company, you can go up to 30 years you can go. Same like preference, anga 20, 30, here 10 and 30. Are you following, guys? How to create the charge? The creation of charge can be on charge of the company holding subsidiary in favor of the debenture trustee. Now, who is this debenture trustee? Company has to appoint debenture trustee before issue of prospectus or letter of offer. Are you following, guys? Before issue or letter of prospectus and letter of offer within 3 months from the date of allotment of debenture trustee. So basically, debenture trustee will be appointed, but the debenture trust deed will be made within 3 months from the closure of allotment. Once allotment is done, the debenture trust deed will be made within 3 months. Is this clear, guys? Now getting into a few more points. Sir, who is this debenture trustee? What is his work? But before that, Yeah, who is this debenture trustee and what is his work, guys? Now, debenture trustee is the intermediary between the company and the debenture holders to solve all the issues. Debenture trustee is needed if you are going for a public issue and if you are going for issuing prospectus and number of members are exceeding 500. Sir, number of debenture holders are only up to 500, sir. Up to 500. No need debenture trustee. Because only 500 people, they can directly deal with the company. If it's crossing 500, then we need to have a debenture trustee. Are you following, guys? Now, who is this debenture trustee? Very important. These points are very similar to deposits. Who cannot be? So, who cannot be? Because independence is very important. We have some points. Basically, over here, any stakeholder with the company related in any manner cannot be a debenture trustee. For example, shareholder cannot be debenture trustee. Promoter, director and their, relative. And promoter, director and relative of the company, company's associate, company's subsidiary and company's holding. That only in mnemonic I wrote here like cash. Company or associate, subsidiary and holding. I can't be promoter, director and KMP of this full group. Then you can't be relative of above also. You can't be relative of the cash group also. So you can't be promoter, director of cash and you can't be their relatives as well. Are you following, guys? Any person who's indebted to the company, I have borrowings with the company, sir, then I can't be a debenture trustee. Or even if you're given guarantee, you cannot be a debenture trustee. Lastly, if you have any pecuniary relationship with the company, for 2% or more of its turnover or total income or 50 lakhs, whichever is less. So what they're trying to say, 2% or more of the turnover or 2% of total income or 50 lakhs, whichever is less in the preceding 2 financial years or current financial year. If you have pecuniary relationship, you cannot be a debenture trustee. These are points you have to be aware, but don't mug up. Any kind of relationship. Sir, why this pecuniary is coming over here? This is mainly for business relationships. It's not allowed. Are you following, guys? Sir, what about casual vacancy? Now, this debenture trustee, what is his work? His work is to take care of the problems. If he is very lethargic, then he will be sued for damages if there's any loss. Casual vacancy, if he is leaving by himself, then board will fill the vacancy. Are you following, guys? If it's coming because of resignation, just like auditors, casual vacancy because of resignation, then written consent of majority of the debenture holders, written consent of majority of debenture holders, they will fill the casual vacancy. Removal. Now coming to removal, there are 2 3/4 points in this chapter. 3/4 of value of debenture holders will vote. How many percentage, guys? 3/4 of value will vote for 2 cases. One, if you want to remove the debenture trustee, 3/4 should vote. Or if debenture trustee is having some liability on him, to exempt him from damages. To exempt from where, guys? To exempt from damages. So 3/4 comes in 2 cases. Here debenture voting, 3/4 comes in 2 cases. One is to remove that fellow from the post or to exempt him from damages. Sir, similarly 1/10 also will come. 1/10 will come where, guys? 1/10 will come, very simple, if you want to, conduct a meeting. Like how EGM, members can call for an EGM. How members will call for an EGM? Members will pass a resolution. They will, 1/10 will make a request for EGM. Like that here, debentures also 1/10 in value call, they can call for a meeting. So we have learned 3 limits, guys. We have learned 1/10, we have learned 3/4, and we have also learned majority in writing. What are these 3 things over here? Very simple. If it is 1/10, it is for calling meeting of debenture holders. If it is for 3/4, it's 2 things: to remove the debenture trustee or to exempt him from damages. If it's majority in writing, to fill casual vacancy. Are you following, guys? Casual vacancy will be filled. Are you understanding, guys? Clear? These are the points with respect to debenture trustee. When the debenture trust deed will be made? Within 3 months from closure of allotment. Are you all with me, guys? Hello? Next, debenture meeting. Either debenture trustee can call by himself or, like I said, 1/10 we will go ahead. Are you following, guys? Now, whenever debenture trustee has a doubt against the company, that company may not pay the debentures, he can go and apply to the tribunal. Tribunal will pass the company, ordering the company not to incur any further liabilities. Not to incur any further liability. Are you all with me, guys? Clear? Okay. Next, Sir, what about debenture redemption reserve? Every company should create debenture redemption reserve where they have to transfer before the end of this year. How much? 15%. 15% should be transferred, and like whatever is going to mature next year, whatever is going to mature next year, other 15% should be transferred. At the same time, it should be deposited by 30th April of every year. Are you following it? So 15% of, simple sir, 15% of what is maturing this year and 15% of what is going to mature next year should be transferred to DRR before 30th April of each year. Are you following? I'm repeating. Whatever is going to mature this year and next year, 15% of that should be transferred. Are you following, guys? Clear? Then here they are saying next, it should be deposited where, sir? This money of DRR that I'm saving, no, should be kept in safe funds. Should be kept in very safe funds. What are they? Scheduled bank or unencumbered securities of Indian Trust Act. Are you following, guys? Then you have some table. What is the percentage of DRR? Basically, if you see terms like All India Financial Institution or other or listed company, if you see now, it is fully exempt. Remaining listed company, it is exempt. All India Financial Institution, listed company, it is exempted. If it is NBFC, it is usually 15%. Again, for unlisted All India Financial Banks, PFI, it is no need to create. NBFC, here unlisted NBFC, no need to create. Listed NBFC, you have to create how much, guys? 15%. And remaining unlisted company, it is 10%. No other option. You have to go through this dabba, which is there in the book also. So far they have not tested, but if you don't know anything, default rate is, sir, simple. I don't know anything, sir. Default is 15%. Listed company, not there. NBFC or all this listed All India Financial Institution, not there. Remaining unlisted company, 10%. That's it. Are you following, guys? With this, we are done with debentures chapter, guys. I hope you have understood debentures quickly. Are you following, guys? Clear? Done with GenZ of debentures. Now, how to revise prospectus from your GenZ notes, guys? This is the prospectus GenZ notes that we have. Same order what we did whole day. See if you're getting the clarity. Okay. 2 subsection 70 talks about prospectus is defined as anything which is described, document described and issued as prospectus. Notice, circular, advertisement where you are getting offer from public and includes rendering prospectus, shelf prospectus. Exam oriented, what to remember. Repeat with me as loud as possible, just 5 minutes. Next we went to section 32 which talks about rendering prospectus. What is rendering prospectus? Where quantum of shares or price per share is not mentioned. What are important over here? File to ROC 3 days before opening of offer, and after closing of offer, if there is any difference, you will again file that to ROC. Next, the shelf prospectus. What are the key points? Shelf prospectus is valid for 1 year from the date of first offer. Then during that 1 year, you can have any number of issues. For that, you have to issue an information memorandum maximum 1 month before issue. At least 1 month is the wordings used. Then what will it contain? Material information, details of charges, if any. Calls in advance is allowed. Refund within 15 days if they ask for the same. Are you able to recollect the points, guys? Exam only this. Don't be like, IO shelf prospectus, infrastructure company, metro. No. Exam only this. Next, we went to section 27 which talks about variation of terms of use object. For that 5 points. First is special resolution in postal ballot. Then explanatory statement, website, newspaper, exit opportunity to dissenting shareholders. You can see and tell, guys, exam is long way there. Next, 29 we saw is demat. In demat, all shares have to be in demat. If it's not in demat, you can't issue. No rights, no bonus, no buyback. Yearly, you have to pay fees to depository. Security deposit should be given for 2 years. PAS 6 should be filed within 60 days of end of the half year to ROC. Who will sign? CA or CS. Reconciliation, grievances. Are you able to follow, guys? Are you able to recollect all the points? Next, 39 we saw allotment of shares. Here, minimum subscription 90%. Minimum application value 5%. Now, 5% of nominal value. Correct. Money should come only in banking modes. Subscription should be received within 30. No. Okay, see, so RHP is filed before 3 days that we saw in different provision. From date of filing prospectus, you receive money within 30 days. Once offer is closed, if money is received less than 90%, it should be refunded within 15 days with interest of 15% from the 16th day. Next, if money is received more than 100%, also the excess should be refunded within 15 days. That 100% you should allot within 30 days. Are you able to remember all of this, guys? Okay. Next, section 40, application to be dealt with stock exchange and underwriting. First, you make application to stock exchange. If they don't give approval, money has to be refunded. Can you have any complaints or any complaints waived saying no, I will not follow? No, such provisions are void. Then prospectus should have the name of the recognized stock exchange. Then that money should be kept in separate bank account. If I apply for 3 stock exchange, you need to get approval of all the stock exchange. Any one doesn't give, full allotment is void. Underwriting, only 3 points. Shares percentages, 5% or AOA, whichever is less. Debentures, 2% of AOA, whichever is less. For paying underwriting commission, I can use profits or proceeds from issue. Online, I want you to repeat with me, guys. Keep repeating. Prospectus should also contain name of the underwriter. For underwriting, what should authorize? Articles. AOA should authorize. Then we went to lunch. Then we came back from lunch. Then we saw criminal and civil liability. 34 is criminal liability. 35 civil liability. 36 class action suit. 37 is class action suit. 36 is personalization. 34 is simple criminal liability. If there's any misleading statement or any omission which is material, you are liable under section 447. If it's immaterial, defense if it's immaterial or you believed it to be true. You thought that immaterial thing is the material thing which was lied. You thought it was believed to be true. 37 is simple. All persons who authorized issue are liable to the person who suffered loss. If fraud is involved, liability is unlimited. 37 also has a few defenses. In simple, you did not know about it. You thought it was true. Once you knew about it, you took effort to withdraw your consent. If you knew about it after prospectus is issued, now you gave public notice. That's it. This is 35. 37 is what? Class action suit, nothing great. In 36, we just have 3 cases where if you are giving wrong information, deceitful information, concealment, liable under 447. What are those 3 things? 3 examples. Underwriting commission, then profit from sale of shares, price fluctuations, and obtaining credit facility from bank, giving wrong information and obtaining. 36 is done. Then again, last 2 sections, 25 and 28. 25 is deem prospectus, where a company is giving shares to allottee, through allottee giving shares to public. Such an agreement is called deem prospectus if 2 conditions are met. The allottee is giving shares to public within 6 months, or allottee has not paid full consideration to the company. Super. Offer for sale, nothing great. Existing shareholders of company selling shares to the new shareholders. For that, some provisions like 3940, 90%, 5%, allotment, application to stock exchange, underwriting, all these are not applicable. Some other provisions like 26, contents of prospectus, 34, 35, 36, 37, criminal, civil liability, punishment and class action suit are applicable. Any expense incurred should be reimbursed. That's it. Are you able to follow, guys? Perfect. Okay. Yeah, clap. Okay. That's it. So what is left at this point in this chapter is basically private placement under section 42 and few not there sections which I told, 24, 30, 33, 38, 41, which we will do tomorrow later. These are all private placement important. Those 5 sections, 5 minutes. That's it. Thank you, guys. See you after the break. Hi guys, let's start off with GenZ revision for Incorporation of Company, section 3 to 22. Important, 1 question will come in exam. Okay. First I'll always go in same section order, guys, all chapters. Section 3 talks about minimum number of members. Forget the table, you know it. Simple. For OPC, minimum maximum is 1. For private, minimum is 2, maximum 200. For public, minimum is 7, maximum is unlimited. What about LLP? LLP, what is the minimum? 2. What is the maximum for LLP? Unlimited. Okay. So LLP is combination of private and public. Next. Director, not that important for exam. OPC will also be 1. Director will be 1. Private will be minimum 2, maximum 15 and public is minimum 3, maximum 15. Are you all with me, guys? They will not ask you director's limit. Minimum you be aware 2 and 3. Section 3. Then section 3A is unlimited liability. Unlimited liability, when it will come, if number of members in a company is reduced below this 7 or 2 and business is carried on for more than 6 months, you have 6 months to correct it. But if you don't correct, then liability will become unlimited after the expiry of 6 months for the remaining members. Sir, members itself are not there, sir. All members died. That's why they are not able to increase it. Then legal hair, when they come, for them liability becomes unlimited. Otherwise, they have to wind up the company. Next, so section 3 is number of members, 3A unlimited liability. So to start a company, I have number of members. Next, what you need section 4 and section 5. Section 4 is memorandum, MOA. Section 5 is AOA. What are the clauses in MOA? Name clause, capital, object, situation, liability and association. In each clause we have points, but to alter any of the clause you have to pass. Special resolution should be passed. 2 clauses which cannot be altered is liability and association. I can't change liability after it's fixed. Association is who are signing. How can I change the people who have signed it? Are you following, guys? Other clause you can alter by passing a special resolution. In section 13 talks about alteration of MOA. We'll come back to MOA detail points little later. Coming to AOA. AOA talks about hold on. Yeah, let's resume, guys. Coming back to articles. Articles talks about internal management of the company, that you all know, guys. Here within articles, very important, how to alter articles. Again, section 14 by passing special resolution. All of you with me, guys? Now in entrenchment provision, very important. What is entrenchment provision? Keeping something much more stricter than the special resolution in the articles is called, what to say, entrenchment provision. Normally special resolution will be 75% or more. I am saying 80%, 85%. That's called entrenchment provision. Sir, how to keep entrenchment provision? When company is formed in incorporation, I can keep it. Or later, if it's a private company, I can change it or add it by passing a unanimous resolution. For public company, special resolution is required to add or remove an entrenchment provision during the life of the company. Are you following, guys? Clear? Okay. This is section number 4 and 5. 5 talks about articles. Articles we fully finished. Now, both MOA and AOA are coming from the Act. So, Act will override what, guys? AOA and MOA. So, quickly. 4 is MOA, 5 is AOA. Act will override MOA and AOA. MOA clauses we will see later. But remember, to alter the clause, you have to pass special resolution. Capital clause alteration is section 61. We will see when we go to share capital. Here you should be mainly aware of name clause alteration and object clause and situation clause alteration. Object clause very simple. I will finish in 1 second. Pass special resolution, intimate ROC. That's it. Only situation and name clause, there are some more provisions. Next to section number 9. Once company is incorporated, they say company can hold assets, can hold liabilities, can sue others, the others can sue company, company separate legal entity, perpetual succession, all that comes over here. Effect of registration, can buy property, have liabilities in their own name, and then be sued, separate legal entity, perpetual succession, all those points, effect of registration. Suppose a question comes, what is the proof company separate legal entity, perpetual? Section 9 gives them like a birth certificate or a power is given over that. Next is section 7 is incorporation of a company. When a company is incorporated, what is the procedure? So this is the simple point, incorporation of a company. I will quickly tell you who can incorporate company. Only promoters can incorporate a company. For promoters, who are promoters? Promoters is defined as their name is mentioned in annual return or prospectus as a promoter, or they have control of the company directly or indirectly, or in whose directions or affairs directions company will act. So basically second and third point, control and in whose directions board is accustomed to act, is the holding subsidiary relationship. So you have control over the company in holding subsidiary relationship, or name is mentioned in annual return or prospectus. That's called a promoter, 2 subsection 69. Now these people will make an application in INC 32 to the ROC where they want to incorporate, whichever jurisdiction, Chennai, Bangalore, Mumbai, wherever. In that they have to give attachments. That attachments only is section number 7. What attachments I have to give? That only we are going to see here. Very simple. First for LLP and here, both declaration by CA, CS, CMA, not all, any one or any other person who is authorizing the MOA, AOA, they should say that everything is true and fair. Beyond this, MOA and AOA, whoever is signing, they should also authorize. Sir, foreign company, sir, then the foreign director also should authorize, guys. They have to give some declaration. What declaration? Very important declaration. All information is true and correct. None of the management is convicted with any offense of promotion, formation or management. We have not convicted of any offense in the past. And last 5 years, we have not been guilty of fraud or misfeasance or breach of duty. Misfeasance means taking bribe. I never took any bribe. So this basically, this first set of points is lot of declarations, guys. Then second set of points is simple. Give the MOA and AOA, attach that. Then give some basic details. Address of the company, address of directors, KYC of directors. I am director in some other company. That also. Look at this address. Then surname, nationality. Then consent. Foreign national, give his business visa. Because foreign person cannot start business in India with a tourist visa. He has to have what visa, guys? Business visa. Once you submit all this, so far they have never tested this, but be aware of that last 5 years, all of that. You will get certificate of incorporation in INC 11, which is a 21 digit number. This only leads to section 9, effect of registration. So section 7, the submit document submitted will lead to section 9, effect of registration. If the ROC finds that you gave some wrong information, then it will lead to fraud, and they will either liability will become unlimited, they will order for winding up or remove the name, or they will take over the management of the company. This is the whole process of incorporation. Are you guys clear with this? Okay. Now I'll come back to the GenZ notes. Okay. Now if you see, this is section 7, effect of documents. Are you all with me, guys? So now we are done basically with section 1 title, 2 is definitions, 3 is minimum number of members, 3A unlimited liability, 4 MOA, 5 AOA, 6 act to override MOA, AOA, 7 is just no effect of documents attachments, 8 we saw in previous chapters of in preliminary section 8 company, 9 is effect of registration. Okay, now we're going to proceed with 10 to 22. So sir, what happens once you register? MOA, AOA are dummy documents. After you registered only they got life. So what happens to MOA, AOA? It creates a relationship between the members and company. Beautiful relationship is created. What is the relationship? Company with members, members with company. Company has to pay to members, dividend, etc. Members have to pay to company, calls, etc. Members with other members also. If they want to buy and sell shares, it creates a family binding relationship. If they sign the documents, it binds the company and members. That's this section number 10, effect of MOA, AOA. 11 is not there. Instead of 11 only, you have something called commencement of business in section 10A. When I incorporated the company, if you look at the procedure there, they will only tell you address for correspondence till the office is established, only they will give you. So after you incorporate the company, within 180 days, 2 things you have to do. You have to file to ROC within 180 days. 2 things you have to file, guys. One is that time temporary office. Now verification of registered office. What is the final office? So give the details. And subscribers of MOA should allot shares. They have to pay money. So whether subscribers of MOA have been allotted shares and paid the amount of capital. So 2 things I have to file. Very important within 180 days. What? So allotment took place, money has been received, and address, registered office, permanent address. This is section number 10A, commencement of business. Then only ROC will believe that after incorporation you have actually started doing the business. Next is section 12 is registered office clause, shifting of registered officer. Very simple. Sir, I want to do change within the city, town, village. Then just to pass a board resolution, intimate ROC within 30 days. Sir, within the same state and the same, what to say, ROC, no change of ROC, same jurisdiction, let's say one city to another city, but same ROC, same state. Just apart from board resolution, you will additionally pass what, guys? Special resolution and intimate ROC within 30 days. Again, in all these cases, generally special resolution means intimate ROC in 30 days. Okay, sir, I'm changing from one state to another, or from one state to another state, or within the same state, change in ROC. These points only are detailed points, guys. So what are these points? We will come back to this in the last. Let me come back to this in the last. Next, this is section number 12. Next 2 sections we already saw above. Section number 13. We already saw section 13 and section 14, read along with section 4 and 5. 4 is alteration of MOA, 13 is alteration of MOA, 5 we saw as AOA, 14 is alteration of AOA. That's why I moved to 15. If you're not able to focus section numbers, it's okay. Provision is important. Do you know this provision? If I make alteration, sir, what I should do? Nothing to be worry. Make alteration in all copy and note that alteration in all copies. That's it. Are you following, guys? Next is rectification of name of the company, section 16. So this rectification of name can be two ways, by itself or by central government, tribunal order. Either the name is identical to some other company, or trademark is identical or similar to some other company, then they will order us to change the name. If RD orders, you have to change within 3 months, and once I change it, guys, I have to intimate ROC within 15 days. Intimate ROC after the change. Are you following, guys? Are you following? If the company is not changing within 3 months, then the central government, basically RD, by itself, they will go ahead and change the name. So simple, sir, timeline. They will pass an order to asking us to change the name. You have to change within 3 months, and once you change, intimate ROC within 15 days. Sir, what is this 3 years pointer? If somebody wants to complain about your name to RD, I am using a trademark, and let's say instead of Bata I'm using Beta, or let's say Bata with double A I'm using, okay, for footwear. If I want to complain about somebody using my name, now we have CA classroom. Tomorrow if somebody starts a similar name, I can't claim because trademark will not come, general names. But if I create a short form or I add some more elements to it, okay, for example, Mind and Company, we have Miko. Miko I can get trademark because it's not a unique name. Now if somebody else also is starting another mental health company with Miko, then I can complain about that to the ROC within 3 years from the date of incorporation. Are you following? This is section number 16, guys. Section 17 is simple. Section itself says, if you want any copies, any documents of MOA, OA, or any agreements or resolutions company has passed, you can ask the company. They have to give it to you within 7 days, if not 1,000 rupees per day of penalty. That is section number 17. Next is section 18, conversion of company already registered, private to public, public to private. Very simple. Change the MOA and AOA, then apply with registrar. After registration, old registration should be closed. Then you will get the new certificate of incorporation. Simple. Amend your articles, and then you will go ahead and MOA and file it. Okay, not that important. Next is section 19, very important. Subsidiary company cannot have shares in holding. If you already have those shares, that is fine, but now you can't get more shares. What are the 3 exceptions when you can have shares? Legal representative of deceased member. That means you are the legal representative. Deceased member is the shareholder. I am their legal representative. Those shares I can vote. Or holding shares as a trustee, I can vote. In these 2 cases, you are allowed to vote. One case you are not allowed to vote. It was already there before I became subsidiary. Then you cannot vote in this case, or subsidiary cannot vote in the holding company. Next, last 3 sections, 20, 21, 22. Very simple. I'll come in reverse. 22 is execution of negotiable instruments, bills, promissory note. How to execute? Company cannot go in artificial person. So who will execute? How I will execute? If company is having a common seal, then CS plus 1 director. If company is having question, it's common seal or no common seal? If no, it's not like this. It's written wrongly. Sorry. If company is having common seal, I will execute with common seal. If there is no common seal, who will execute? CS plus 1 director. If CS is not there, 2 directors. That's it. This is the correct one. So very simple, guys. Execution of negotiable instruments. If there is common seal, I will go and use what, guys? Common seal. Common seal not there, sir. Then I will use CS plus 1 director. If there is no CS, 2 directors. Are you all with me, guys? Following? Easy understanding. This 22. Authentication of documents. Who will authenticate? KMP, who is authorized, or any other person authorized by the board. So authentication document, KMP or person authorized by the board of directors. Lastly, serving of documents. For you to serve documents, ROC to company or company to ROC and members. What are the modes I can use, sir? Very simple. ROC and company, registered post, speed post, courier, electronic mode. Only when members is coming, company and members is coming, same. Plus, if there is other mode prescribed, whatever fees for the member is saying give WhatsApp, now I can send in WhatsApp and collect the fees. Are you following, guys? Here you have to be careful with Nidhi company exception. I'll come to that. So these are our GenZ notes. Now let me come to more detailed points over here when it comes to Nidhi company quickly. In section 21 Nidhi company comes. I just want to talk about that. Anyway, Nidhi we have separate. Now serving of documents, where serving of documents is happening for a Nidhi company, you don't have to serve. You should serve it only if somebody has face value of 1000 rupees or more, or 1% of paid up share capital, whichever is less. Are you understanding, guys? So serving of notice, for regular company I have to serve to everybody, but Nidhi company I will serve the notice only if you have shares of 1000 or more, or 1% of paid up share capital, whichever is less. In other case I will just give a public notice in newspaper, you come and see by yourself. Are you following, guys? Okay, then be aware of the doctrines, guys. What are the doctrines that we have? We have some doctrines like doctrine of indoor management, doctrine of constructive notice, doctrine of ultra vires. What is doctrine of ultra vires? Anything beyond object clause is void, you cannot do that. What is doctrine of constructive notice and indoor management? Very simple. Doctrine of indoor management, doctrine of constructive notice. Okay, I'll write it here quickly. Doctrine of constructive notice, doctrine of indoor management. Just to quickly tell you, this gives, doctrine of constructive notice gives a defense for company against third party. I will assume the third party has read and understood everything else. Although the exception is doctrine of indoor management, this gives benefit for third party to say that company has to follow everything internally. I don't have to go and check if they actually followed or not. For doctrine of indoor management, again we have some exception in case of fraud, or in case of any kind of forgery, or in suspicion of irregularity or knowledge of irregularity. Then again the same defense will come. If this is there, company has defense against third party. Are you following, guys? Coming back to shifting of registered office over here, that one part I is what to say. In both shifting, guys, now one state to other state or within the state, let me tell you some key points. In both you have to get permission of regional director. Regional director will give me permission, and then once they give me permission, I will go inform to the ROC. Now the important points over here in attachments, if you see, okay, leave the time limits that you will see, guys, but attachments, if it's from within the state, jurisdiction to jurisdiction, then what they are saying, important things, you have to get consent of all creditors and debenture holders. Some common points over here, I'll tell you what are the common points for both shifting state to state or within the same state. Yeah, within the same state. Some common points are there. What are the common points? In both, you need to ensure that there is no default in payment to workman. Payment has been made. Consent of creditors should be obtained. Then company should say there is no change of court or jurisdiction, and we should also get permission from secretary of the state. These are common points for both, guys. So that's it. Of course there is detailed procedure, but I don't want to just read the points what is here. Have you understood, guys? Run through the procedure of shifting from state to state and within the state. Important for May or September 2025 exam. If it comes in May 25, good. Not important for September. Okay, if it doesn't come in May, important for September. But for May, this shifting process, be careful, guys. That is little important one. So with this, we have spent about 20 minutes, little longer time, but we are done with incorporation of company. Are you guys following? Understood? Hi guys, let's start off with GenZ marathon with preliminary chapter. Most of you skip this chapter. We will try to revise in 10 minutes all the key points in this chapter, guys, and types of companies where you will make mistakes quickly. First, based on incorporation, you have companies. Registered company, statutory and chartered company. Registered and registered under this act. Statutory means under a special act like LIC. Chartered company means under the royal charter like East India Company, etc. Based on liability, we have company limited by shares. Limited by shares, na maximum liability is the amount unpaid on what to say face value, paid up face value minus paid up value. If fully it's paid up means liability will not be there. Then unlimited company, liability is unlimited as the name says. Limited by guarantee. Limited by guarantee, na, at the time of winding up, they will contribute to the assets of the company by paying any extra amount. Company limited by guarantee can also be subclassified into company with share capital, company without share capital. Are you following, guys? See, this is, I'm not teaching you anything here. I'm revising what you already know. Most of the points that you know, am I covering over here? Of course, one or two I may miss out, guys, but I will even tell some things that you don't know. That's it. Okay. Next, Next company classification based on members, we have 4 types of classification: small company, one person company, private company and public company, guys. Okay, these are the 4 ones. Small company, simple, it's other than a public company. That means small company has to be a private company, for which they gave limits. For small company, paid up share capital will be up to 4 crores, turnover up to 40 crores, 4 can go up to 10 and turnover can go up to 100 crores. You have to satisfy both. Even if one limit crosses, you will no more be a small company. So paid up share capital maximum 4, turnover maximum 40. Important in small company, many people skip, is limit but 2 you should not check. Additionally, you should also check, it should also not be a holding or subsidiary company. Section 8 company cannot be small company, and if it's a company governed by any special act, it's not a small company. Subsidiary or holding company cannot be a small company. It should be a standalone company. Are you following, guys? Next, public company, which is not a private company. But what is important to note here, any company which is a subsidiary of a public company, holding is public, whatever the subsidiary, even if it's private, it will be deemed as a public company. So subsidiary of public company is a deemed public company. Are you following, guys? Next, move on to private company. What are the key points in private company? People say there is prohibition of share transfer. No, there is restriction to transfer shares, but prohibition to issue shares from public. Within the members, we can freely transfer the shares. Maximum is 200, guys. Of course, OPC it's not applicable. In this 200, joint shareholders will be counted as 1, and then employees, past and present employees are excluded. Very, very important. Only if they receive the shares. When, guys? During course of employment. During the course of employment, if they receive the shares only, I will not count it. This is for private company. All these points you should not revise. You should already be knowing this, guys. Next, when you come to one person company. First, let me finish off the one person company. What are the timelines, sir? Main timelines in one person company: 15 days, 30 days, 120, 180 days. Let me finish off all these 4. I'm going to do timeline wise revision. First to 180 days, let me come in reverse. You can maximum be member only in one OPC, but at the same time, if you become member in 2 OPCs, within 180 days, you have to decide which one to continue. That's 180 days. So what is 120? That one person company or a member should be a resident in India, should be a stay in India for at least 120 days in the previous financial year. Sorry, it should not be resident. He should be a natural person, citizen of India. Citizen of India is sufficient. Resident of India, otherwise I don't care. Citizen is enough. There is a small difference, guys. Okay, citizen is Indian passport. That citizen should be in India for at least 120 days in the previous financial year. Sir, what is 30 days, sir? What is 30 days, sir? And what is 15 days? Simple. If a nominee leaves, look at this. If nominee leaves, you have to appoint new nominee within 15 days. And then you have to intimate ROC within 30 days. Now 15 and 30. I'll again repeat. If a nominee is leaving, find a new nominee and appoint within 15 days. And then intimate ROC within 30 days. These are the time limits: 15, 30, 120, 180 in OPC. Other points of OPC, let me quickly finish. I told you who can be member of OPC, Indian citizen. The nominee also same provision applicable. Nominee can't be a foreign national. Nominee also has to be an Indian citizen who should stay for at least 120 days. Applicable for nominee also. Are you following, guys? Next, maximum you can be one member OPC and one nominee of one OPC. Then he has to give his written consent. Minor can be a, no, minor cannot be a nominee, guys. Are you following, guys? That means, therefore, non-resident also can start if he stays in India for 120 days, but he has to be an Indian citizen. Next, the other miscellaneous points in one person company, guys. One person company cannot carry on NBFC business and investing in a body corporate. Risk is high, not allowed. You cannot convert into Section 8 company. You can convert to private or public, but you can't convert to Section 8 company. The name of the company should have what, guys? OPC. Same like small company. Just like small company, we have exception. You can't be holding or subsidiary of some other company. Are you following, guys? So one person can't be member and nominee in more than one OPC. So if Reshma is there, she can have one She can be OPC in one company, nominee in some other company. Are you following, guys? Clear? Understanding? These are all the key provisions in 1% company. We have finished everything. Next, so we have finished now company classification based on members. Now company classification based on controls, guys. Here we have two types: holding and subsidiary company and associate company. Holding and subsidiary is simple. Subsidiary is defined. Holding is defined as other than subsidiary. Holding a defined panla. Subsidiary only they have defined. So what is the thing they have given? Basically 3 points of holding subsidiary. First is controlling composition of board of directors. I can appoint, remove, all of that. Second is controlling 1/2 of total voting power. They don't use paid up share capital. 1/2 of total voting power. Half or more than half. Okay, are you following, guys? Actually it's more than half. The wordings will be more than 1/2 of total voting power. Are you getting it, guys? Last, sir, what is this deemed subsidiary, sir? Subsidiary of subsidiary. Are you following, guys? Holding is having subsidiary. Subsidiary 1 is holding of subsidiary 2. Like this. Holding subsidiary 1, subsidiary 2. Then holding will be automatically holding of subsidiary 2 also, even if the relationship comes by voting power or if it comes by controlling composition of board of directors. Are you all with me, guys? Understanding? Next, associate company is what, sir? Associate includes joint venture. Simple definition: you will be an associate if you have significant influence. If you have what, guys? Significant influence, and you should have at least 20% of total voting power. 20% of total voting power, guys. And here we will add one more point. You should, if not of voting power, if you can also control business decision through an agreement. You will write this, guys, those who are using GenZ notes. If you have your notes, just check if it's there. So I will be associate not just for 20% of total voting power, 20% of total voting power, or it's not and, it's or controlling business decisions under agreement. I may have zero voting power, but significant influence also includes ability to control business decisions under an agreement. Then you become an associate. Are you following, guys? Clear? Next they are saying what is listed and unlisted company. Listed company are listed on recognized stock exchange. Unlisted company now not listed. Here they are given some rule, very important. What is not listed, even though it is listed on securities, are listed on the stock exchange, but still it is considered as not a listed company. Amendment: public company not listed, even though their shares are listed. You have to look for these terms for company where non-convertible debt securities or non-convertible redeemable preference shares comes now, then it will become unlisted company. Are you all with me, guys? Following? Then unlisted companies other than listed company. Now last classification, which is others classification. In this many times they have asked question, guys. First is government company. In government company you should have not less than 51% of paid up share capital. I'm repeating, not less than 51% of paid up share capital is either held by central government, state government, or combination of both. Or if you're a deemed you're a subsidiary of a government company. Are you following, guys? Clear? Now again government company, one more point if I have to add, it will be subsidiary of government company is a government company. That is not there here, just quickly add that. Subsidiary of government company is what, guys? Government company. So government company two ways: 51% or more is held by central, state, or combination, or I'm a subsidiary of a government company. Sir, what's a startup company? Never tested. I need to get the DPAAT certificate from the MCA. It should be in the first 10 years of incorporation, and the turnover should not exceed 100 crores in the preceding financial year. Okay. Public financial institution is simple. It's a combination of two things, guys. It's a combination of government company plus company incorporated under a special act. Just make the small change. It is a public financial institution, is a combination of government company and company incorporated under a special act. Above we saw that special act. So company incorporated under special act plus government company becomes public financial institution. LIC is incorporated under special act and 51% or more is held by central government. Then it becomes a public financial institution. Mix of both. Government definition also satisfied. What to say? Special act also satisfied. Here you just try and change it to not startup, guys. It is special act. Are you following, guys? Next, dormant company. Sir, what is a dormant company? Very simple. Company is incorporated for what purpose? It's incorporated for holding a future asset, project, or holding an asset or intellectual property, guys. There is no significant accounting transactions or no, these three are what to say, guys. It becomes a dormant company holding for future asset, future project, and no significant accounting transaction. Or it's a normal company but not filed annual return and FS in 92 and 137 for the last 2 years. So FS and annual return not filed for 2 years. Now again become what, guys? Dormant company. Are you following, guys? Sir, what is this no significant accounting transaction? You should not do anything, but few things you can do, like paying office expense, then office records to this expense, then shareholders allotment you can do, and any legal fees that you have to pay you can do. So office records you can maintain, filing to ROC, those fees you can pay, and legal expense if any is there you can pay, guys, like PF, ESI, all of that. Are you following, guys? Last one, with that we'll close. No, 3 more are there. I'll come in reverse. Nidhi company, similar to self-help group, guys, where people will, within that community, they will give deposit and take loans. Foreign company, in foreign company we will see in detail, but in simple, it's incorporated outside India. Place of business is therein in India by itself or through an agent. By itself it can be physical or electronic. Agent also it can be physical or electronic. Examples also are given. For example, place of business in India by itself physically means Apple. Place of business in India by itself electronically mode means it will be what? Alibaba. Direct website. Are you following, guys? Okay. Now come to Section 8 company. So what are the key provisions in Section 8 company? Mainly Section 8 company is incorporated for what purpose, guys? Promoting commerce, education, charity, and the profits cannot go back. Profit should go back for charitable work. Can Section 8 company declare dividend? No, they cannot declare dividend. For how to become Section 8 company, apply to central government, they will give you a license. Now, I am getting the license but not doing charitable work. I am doing profitable work and taking money. Then that time, if at all central government finds this, they will revoke the license for doing the work fraudulently. Or sometimes they will also order you to convert to an other company, you will convert to another company, or you will also be ordered for what, guys? Ordered to wind up. You will be ordered to wind up or amalgamate with some other company of similar nature. Are you following, guys? I will be ordered to wind up or convert to another normal private or public company or amalgamate with some other company. Few other points. Sir, if you want to alter the MOA or AOA of Section 8 company, you need to get central government's approval because they gave the special license. Notice for AGM is 14 days instead of 21 days. Are you following, guys? And they don't have to maintain all this remuneration committee, all that is not required. Even maximum number of directors, there is no limit. One more point if I have to add exemption. Yeah, notice is there. And even shorter notice also is possible if they can get that. Leave that. Okay. These are the main core points. Are you following, guys? This is preliminary. Also keep in mind, remember to learn how Section 8 company will be converted to another company. For that we have a process. And Section 8 company to incorporate, what are the attachments to give. For that there are some process. Maybe I will quickly show in our book once, guys. Okay. How to incorporate Section 8 company and what is the process. Just ensure you are aware of that point also. Look at this. Yeah. If you want to incorporate Section 8 company, be aware of that process where you have to give a file to regional director by passing special resolution. You have to give some, and the regional director will get approval of charity commissioner, income tax officer, all of that. And then within a week, they will give you an approval. This is an important process. How to become Section 8 company. If you want to, this is how to convert. So this is for converting, guys. For converting, you will apply to regional director by passing special resolution. They will check with the other concerned departments and give you within 1 week decision. Within 1 week you have to inform RD. Next, for applying to become Section 8 company, you will normally apply and give some additional attachments. Here the important point I want to highlight, apart from your MOA, AOA signed by CACS, is an estimate of future annual income and expenditure of the next 3 years should be given when you are incorporating a Section 8 company. Are you following, guys? This is preliminary. We are fully done with that before we go to the next set of chapters in Gen Z. We have taken about 16-17 minutes, but I hope it's clear, guys. Able to revise all the points. Okay, that's about it. Hi guys, let's quickly revise General Clause Act in our Gen Z revision. This chapter, if you see, we just have to remember the concepts and just a few definitions. Let me go in the same order itself. First, financial year is basically from 1st April till 31st March as per British calendar. So year in this act is what, guys? British calendar, which is nothing but Jan to December is called year. They might ask you what is immovable property, 4-mark question, definition, and they ask you case study if this is immovable property or not. In that, immovable property will include land, benefits arising out of land. Land, benefits out of land are all nature benefits, things attached to earth, and things permanently fastened to anything attached to earth. Are you following, guys? Okay, the 4th point alone is not written here, but the 4 points of immovable property is what, guys? What is it? Land, benefits arising out of land, things attached to land, and things permanently fastened to anything attached to land. Are you? That means is fish immovable property? Yes, fish is immovable property, benefits arising out of land. Apple immovable property? Yeah. Yes. Until we plug the apple up, it will still be immovable property. Next, to go to good faith, guys. I'm only keeping key definitions over here. At least this you will revise in 10 to 15 minutes. Good faith. Anything is deemed to be done in good faith, whether it is done negligently or not. So this act is saying, even if you are careless, it is okay. Even if you are negligent, it's okay. Even if buyer is not beware, it's okay. So what is good faith over here? Deemed to be done in good faith, whether it is done negligently or whether it's not done negligently. Are you all with me, guys? Following? Hello? Okay. But in Indian Contract Act, negligence will be punished. So you have to write both answers, Indian Contract Act and General Clause Act. Final answer you will conclude as per Indian Contract Act, saying that if you have done it negligently, you will be punished. Are you following, guys? Clear. Official Gazette. It is the official press where government will put all notifications that will be published on a weekly basis, monthly basis. It will be published on a weekly basis. Latest exam they asked what is document. Document can be anything, guys, whether I write on the hand, on the forehead, projector, on the floor, in beach I'm writing, anything is document. So what is document? Any matter written, expressed or described on any substance by means of letters, figures or marks. You don't have to specifically, any way you write it on in any substance which is used for recording that matter. That is called document. Even if you write temporarily in one place, what I'm writing here also is a document, even if I'm going to erase it immediately. Are you following, guys? Definition of document. Next, government, like those 3 lines, government includes 3 things: judiciary, executive and legislative. Those 3 things are taken care. Commencement means what? When the act is coming into force. When the act is coming into force, guys. In that, when it's coming into force, generally the date on which president is going to sign the letter. If president is president is signing, or the date which is mentioned in the letter. So generally an act comes into force when president signs, or the date which is mentioned in the particular letter. Are you following, guys? So when he's signing, if a particular date is mentioned, that date. Otherwise, if no date is mentioned, date on which president is signing. Next, I'm going in the same order of what notes we have over here, guys. Okay, concepts. I'll just tell you the concept to remember. Here I'm not going to focus on what to mug up. That you will take care. You have to go home and mug up. Concept. Effect of repeal means what? If an act is repealed, if VAT went and GST came, these 5 points, side headings you have to remember in exam. What is that? Revive anything not enforced means just because VAT went and GST came does not mean any other act also will come. Affect the previous operation. All the previous input tax credit will be carried for. Whatever happened in VAT is still valid. affect any right, like whatever rights and obligations on previous input tax credit I get can be carried forward. Affect any penalty. In previous VAT I had to pay penalty, now also I have to pay penalty in GST. You can't tell VAT is gone, you will not pay. Affect any enquiry, litigation or remedy. Previously when inquiry is going on in VAT, now just because GST came you can't tell I will not do inquiry, inquiry will still go on. Are you following, guys? Okay. Next, repeal of act making textual amendment in act. What they are saying, where act text is repealed, by which text in act Y is altered, such repeal shall not affect act Y. Simple example, let's say Income Tax Act 1961 and Companies Act 2013. Now let's say new Income Tax Act is going to come, so this becomes important. If this act is repealed, they closed it because a new Income Tax Act is going to come in 2025. But in Companies Act, they will still mention that tax computed as per Income Tax Act 1961. That means this provision will still have validity. That means they are trying to say, refer to the new act. Are you following, guys? Next, revival of repealed enactment. If I want to bring back any act from the past, you have to tell why. You have to state the necessary to intention. If I want to bring back VAT, I have to tell why I am bringing back VAT. Are you following, guys? Next, where a provision construction of reference to repeal enactments, where an act refers to provision in Act Y and the provision in Act Y has been replaced by Act Y new, then it is deemed. Again, very similar example to what we saw. Okay, let's say Companies Act 2013 talks about not the whole act itself. Earlier we spoke about act. Now within the act I am talking about a subconcept. Now that subconcept is removed and replaced in new Income Tax Act 2025. Then this act is basically referring to the new one. Are you following, guys? For example, in Income Tax Act also, they will tell compute profit as per Companies Act 1956. But that act itself is not there. Now what is there? 2013. That means you have to read this as if you are reading Companies Act 2013. Are you following, guys? Okay, next. Commencement and termination of time. What is this concept, sir? When I tell you have to pay dividend from 30 days of declaration, when I use the word from is used, so I have to pay within 30 days from today, I will not count today. If I have to say notice will be paid, sent within 21 days, or let's say from is best, dividend has to, or let's say charge, company has to file charge within 30 days from date of taking of loan. For counting the 30 days, I will not take the date of loan. I will take from next day. If the word to is used, then that whichever day I am using, that day is included. Are you following, guys? Next concept, computation of time. Very simple. For any public authority, where any public authority or any deadline falls on a holiday, then they are saying automatically I will go for the next day. Wrong. I will go for the next day in which authority is open. So next working day. Are you following, guys? No previous day. Emergency, genuine case. Next working day. Are you following? Measurement of distance. Sir, how to measure distance between Chennai to Bangalore? Car, flight? No. They are saying measure distance on a horizontal plane. Horizontal plane, draw a straight line. Whatever is coming, that will be my distance. Next, duty to be taken on pro rata basis. Here what they are saying, company is saying rights issue will be given 2 for every 5 shares. Okay, I have only 4 shares. How many I will get? Proportionately. Are you following, guys? They are saying I will pay dividend at 10% for every share. Okay, now I have 10 shares, so I will get 10 shares into face value. Are you following, guys? So proportionate. 2:5. I am having only 4 shares. So proportionately I will get bonus, whatever. Are you understanding, guys? Okay. So they are saying you are allowed to take pro rata in any act. Next, meaning of service by post. Many times act will tell, correct? Post should be sent. Notice should be sent by registered post. Should be sent by this post. They are saying a post is validly sent. A post is validly sent if it is properly addressed. Person address is correctly given. It is prepaid. I have put the stamp and it is post by registered post. So something is called registered post. Post is valid only if these 3 are there. Otherwise you have never sent by post. Are you following? Then they are saying registered post is not the same as registered post acknowledgement due. Another concept to remember. What is this, sir? Registered post is he will come and put in your house. Registered post acknowledgement dues, he will get your sign. So registered post is not the same as registered post acknowledgement due. Next, if the tenant, I'm tenant or landlord, if a notice is sent to the landlord and tenant is refusing, hey, take it back, it means notice is served. That means if a notice is served to you, if somebody is refusing to collect it in your premises, if I send to the correct address, notice is served. All common sense points. Okay. Next, provision as to punishable under 2 or more enactments. Here what they are saying, if you make a mistake, you will be punished only once. Sir, for same mistake, there is punishment in SEBI, there is punishment in Companies Act, there is punishment in other acts. No problem. Court will decide where to punish you. So for the same offense, you cannot be punished more than once. However, offense is different, sir. I did murder and I did kidnap. Then they are different. Then different trial, different case. Are you following this? But for the same murder, you can't be punished twice. Only one punishment, even if it's 14 years, whatever. Are you understanding, guys? Sir, I got into 2 cases. One is murder and one is kidnap. Acquitted in one. They are saying you didn't do murder. Appa, I escaped. Does not mean you are acquitted of the kidnap. Does not mean you didn't do kidnap also. For both cases, separately you should be acquitted or separately you should be convicted. Are you following, guys? These are some concepts. Next, power to exercise from time to time. Some miscellaneous points. Anybody in a position of power can exercise it whenever they want. There is no time limit, there is no day limit. Police can check Police can check drink and drive whenever he wants. So somebody in power can exercise the power whenever they want. Are you following, guys? Clear? Next. Power to appoint include power to suspend. If I am appointing Rukmani as the Commissioner of Income Tax, I also have the power to remove her. Are you getting it? So, authority having the power to appoint will automatically have the power to suspend or dismiss. Are you following, guys? Next, power to appoint include power to appoint ex officio. The word ex officio comes means, if I don't have to call Modi ji as Modi ji is coming, Narendra Modi ji is coming. I can just tell, President of India is coming here, guys, make way. So, Prime Minister of India is coming here, guys, make way. Okay. So basically, I don't have to call somebody by person's name. I can call by their official tag. ICA President is coming here, guys, chief guest. Our peers will come no. I also don't know the name now, but yeah, are you following, guys? Okay. Substitution of functionaries. Here what they are saying in substitution of functionaries, next to concept. I am only telling you concepts. Be aware of these concepts. That's it. When a new act is coming in force or a new amendment is coming, where a new law is passed, it would be enough to inform the officer in charge. No need to inform everybody. Tomorrow class is not there. Admin is telling me, that's enough. They don't have to come and tell all of you. I will come and tell you it's enough. Are you following, guys? Let's say we are on this place in rented classroom. They are saying AC is not working. The mechanic need not tell all of you. I will inform all of you. So when a law comes and the authority of the head the whole entity is deemed to be knowing it. So, are you substitution of functionaries? Next is successor. Okay. Now, if any intimation is made to functionaries, it's deemed to made to successor also. Let's say company currently has a CFO. He is leaving, a new CFO is coming. Okay. Whatever rules and regulations and information that this current CFO is having, the new guy also should follow. It is deemed that he is aware of that. It's deemed that the same is made to their successor. So whatever somebody in a position is currently following, next person should also follow. Classic example, politics. Whoever is now Prime Minister is there. Tomorrow if somebody else is Prime Minister, they have to follow all the guidelines which the Prime Minister is following currently. Are you understanding, guys? Okay. Next, official chiefs and subordinates. Okay. Now, if a law is applicable to Commissioner of Income Tax, it's even applicable to Assistant Commissioner. It's applicable to Junior Assessing Officer also. Are you getting it? Correct? If school principal has to follow a particular rule, teacher also has to follow, student also has to follow. That only is official chief and subordinate. If chief is following something, subordinate should also follow that. Are you all getting it, guys? Next, construction of order issued under enactment. If a term is mentioned in notification, it carries the same meaning in the act. We know this act is there, notification is there, circular is there. For example, in deposit eligible company, the term eligible company will have same meaning in act and it will have same meaning in notification also. No different meaning. If it's defined one place, meaning will be constant throughout. Are you following, guys? Next, power to issue include power to amend vary. What they are saying here, if an authority can issue an act, they can also amend it. They can also vary it. If an authority can issue a notification, they can amend it or they can withdraw it. Are you following, guys? That's it. Next, making of rules, bylaws and orders before passing commencement of act. Companies Act 2013 came in 2014, effective date 1st September 2014. Rules I can make even in 2011. Are you following, guys? Not necessary rules should come after act. Rules can be made before also, but its power will come only after act is excised. Are you following, guys? Clear? Understanding? Are you all with me, guys? Okay, so they are trying to say any rules or bylaws can be made even before commencement of the act itself, but it will come into force only after act comes into force, after commencement of the act. When the act will be commenced, the president sign or date in the official gazette. Are you following, guys? Next, continuation of orders issued under enactment and repealed act. So what they are saying, whatever notification is issued in the Companies Act 1956 will still continue under 2013 unless this has been revoked. Are you following, guys? Now whatever notification issued in the current Income Tax Act, tomorrow when new Income Tax Act comes, the current ones will continue. Are you all with me, guys? Hello? Following? Is there any lag in the video? Sure, Ava? Okay, fine. Next, provisions applicable to making rules and bylaw. What they are saying over here, how to make a law. Your separate concept is there. I'm giving you how to make a law. Any act. First they are saying you have to make a draft. The draft should be published, given to public. The notice should be given and I will take consideration of all the public, take all the feedback. Then I will take feedback of other departments also. Then I will take sanction of other authority, other departments. If Income Tax Act is coming now, I will take from what to say, SEBI, RBI Act, I will take all the permissions. Draft comes, then make suitable changes in the draft based on all the feedback and then publish in official gazette. So first publish draft, get everybody's feedback, department, public, again make changes, publish in official gazette, which goes through official gazette. It has to go through two houses of parliament, and it has to go. Are you following, guys? This detailed points is there in the book, guys. Here I am only telling you what are the concepts. Okay. Last one, gender and number follow. Masculine includes feminine unless it is specifically excluded. See, generally when the act is saying he, it includes she. Unless they say for some specific terms, karta only male, it's only male. But today it's not like that. Karta includes male and female, eldest member of family. Next, singular includes plural and vice versa. Are you following, guys? Generally when a singular is there, it includes plural. Are you following, guys? When do I include this singular include plurals? Let's say for example, OPC, stay in India for 120 day, it means days. Unless the act is saying, don't apply that concept. When CSR, profit of last 3 years in Kurturka, when specifically it's 3 years, you can't tell profit of last 1 year. Are you following, guys? So these are the concepts that we have. Anything else we missed out, guys? Big main ones. Okay, hello. Fine. We spent about 17 minutes and we have done quick Gen Z revision of General Clause Act. I hope it was helpful in revising all the concepts. Are able to revise, guys? That's about it. We will go to the next act. Let's quickly revise in our Gen Z marathon interpretation of statutes. I am just going to stay in this one page. Again, this is one chapter where you have to go and memorize. Memorize what, guys? You have to memorize all the terms inside keywords. I will at least tell you the concepts what it is so it becomes easy for you. First, the interpretation versus construction. What is the meaning, sir? For example, interpretation is what I want to communicate to you. What your understanding is construction. For example, girl is messaging you, don't message me. She wants to tell you don't message. But your understanding as you have to message. So, interpretation versus construction basically is what the lawmaker wanted you to understand. That is called interpretation. What he wants you to interpret. What you actually interpreted. That is called construction of statute. So this interpretation of statutes basically has three separate concepts. Rules of interpretation, under that we have primary and secondary rules. How to read law, some rules are there. Aids of interpretation, what is going to help in reading the law better. Internal and external aids. And lastly, we have interpretation of deeds and documents. Let me finish off the rules first, guys. Let me finish off the rules. I'm only going to give you overview over here. In secondary rules, doctrine of nocicta res sources. What is rule of nocicta res sources saying, guys? Rule of associated words. It means when two words are used together, like plant and missionary, plant has different meaning, missionary has different meaning. When you read together, they have the same, together combined different meaning. Trade, business, occupation, separately different meaning, combined it has a different meaning. That is rule of nocicta res sources, the rule of associated words. Each word takes color from the other word. Doctrine of contemporino exposito. Sometimes you will see penalty, race horse, 500 rupees. Income tax act penalty 500 rupees. Small penalties will be there. Or they will tell transfer of shares, you have to give physical shares. Now demat is going on. No, sir, why is the law so old? To understand a law better, try to understand the time when which the law was made. So if you go to the period, the contemporary period when the law was made, you will understand why the law was like that. Are you discrimination against women, sir? That time things were different, so that's why the law was like that. Why stepdaughter is not included, all those things. Are you following? You have to go and read the points inside to know what are the key words to write. I'm telling you a concept. Next, rule of literal construction, primary rule. This is the core and basic rule. When something is clear, grammatically when something is clear, follow that. Law is not creating confusion. Dividend declared should be paid within 30 days. Law is clear, follow that. Second, rule of reasonable construction. Sir, when I am reading this, I am getting two doubts, sir. Should I follow A or should I follow B? For example, Income Tax Act, gift on occasion of marriage is exempt. Now I am thinking, what if I get married 3 times? Then 3 times gift exempt. What if I get married once in Chennai, once destination wedding, then 2 times? That means you are taking a reasonable deviation from what is there. It is capable of ambiguity, doubt. When there is a doubt, lawmaker is saying, if there are 2 or more interpretations, try to give importance to the spirit of the law. What was the intention? You don't try to construct in the way you want. What do you think would have been the interpretation of the person who made the law? His interpretation would have been mainly to tell you what? It's only one marriage, one gift. Okay. Next, rule of harmonious construction. That the word itself says harmony. Let's all be together. If there are multiple provisions creating conflicting provisions, one section is saying A, one section is saying B, try to follow both. In AGM, one section says AGM within 6 months. One section says AGM in 1 calendar year. One subsection says AGM should be held maximum time gap is 15 months. Which one to follow? Follow all 3. Possible, no. Father is saying come home by 9 p.m. Mother is saying come home by 8 p.m. Come by 8, you will follow both. That only is rule of harmonious construction. Within that you have 3 subterms. Without prejudice, then subject to, notwithstanding. Notwithstanding means what is there will definitely be followed. Without prejudice means without affecting some other section. Subject to means I will follow this subject to what is therein some other section. I hope the meaning is same. Okay, you're understanding. Hayden's rule or mischief rule. Basically, this is your loopholes. Whenever there is any loophole in the act, the authority will amend that. After that also, if still loophole is there, we have to see what missed out, what was the smartness of the other person. So under Hayden's rule, when you're studying, remember there are 4 points. 4 points under Hayden's rule. What was the law before? What was the loophole? And what is the remedy that is coming in? Is the remedy actually covering that loophole? That loophole only is called mischief. Okay. Rule of beneficial construction is nothing but same as reasonable construction. But when a benefit is supposed to go to some section of the people, and the benefit is not going, this rule is saying let the benefit go. For example, government is saying for all the farmers, I will give 5 lakh rupees per farmer. But only you should have bank account. Farmer is not having bank account. Here I will deviate. For the benefit of the farmer, let me do it. For underprivileged and some sections of the society, beneficial construction will be done. Even if I am deviating from the law, if it's beneficial for them, I will do it. Are you following, guys? Rule of exceptional construction. Here, generally and means I have to follow both. Or means I can follow anyone. May means I may optionally follow. Shall means definitely I have to do it. But exceptional construction is a case where may is read as shall is read as may, and is read as or is read as and. Depending upon the case where it is used, there go and read the points. There are 3 cases when may is read as shall, and there are 3 cases when shall is read as may. For example, when shall is read as may, when it's done against the government. When may is read as shall, by it's just a mere formality of may. When there is a lot of consequences against public interest, may is read as an obligation coupled with an formality means may is read as shall. Here there are 3 points. Here there are 3 points. Please go through that. Next, the rule of adjustum generis. Adjustum generis says when general words are following specific words, the general word will take the same meaning as that of the specific word. For example, sir, I have lion, tiger, cheetah and other animals. These other animals will take the same nature of the wild animal. That's what is called adjustum generis. But again, there are here important 4 exceptions when this rule is not applicable. 4 exceptions when the rule is not applicable. Okay, what are the 4 exceptions? I will quickly show you the exceptions, guys. In rule of adjustum generis, rule cannot be applied when all the terms are general. Preceding, succeeding also general. I can't use. Specific word is exhausting the genus. I wrote all the wild animals name and then I'm writing other animals. Where a wild animal illa. I have the specific word itself exhausted all the possible points. There is no more general word. Or no. When the specific word is diverse in character, I'm writing tiger, crow, snake, fish and other animals. It's so diverse. Specifically, there is no trait, there is no continuity. It's covering everything possible. So general word cannot take a meaning from the specific word because each specific word is in different corner. One is in North Pole, one is in South Pole. So it's diverse in character. Or the law itself is saying, don't apply this rule means I will not take adjustum generis. I also told you when may is read as shall, when shall is read as may. These are the points, guys. When shall is read as may, against the government, na shall is may. Government will not do anything mandatory, optional only. Intention demands the same thing. Here also, discretion, option coupled with obligation, may is read as shall, and pure conventional. Courtesy kaga I have kept as may, actually it is shall. And lastly, if you read as may, object will be defeated, so you should not read as may. These are the points in may and shall and may. Next, so we are done with all the primary and secondary rules. We have some Latin terms also. I will go there in the end, guys. Now coming to internal and external aids, quickly I will tell you. Basically, this long title, preamble, heading. First 3 I will summarize. Long title is a section on a long title. Preamble is before the act. They will give you object of the act. And heading is before each chapter there will be a heading. Charges, dividend. Question is, what is inside the act? Long title, preamble, heading. Can I use this for understanding the law? Yes. To understand the law, you can use it. But it cannot override the provision itself. It cannot override the provision. Are you all with me, guys? It cannot override the provision at any cost. Next, what is marginal notes? In the side of the act, like how you make notes, some notes will be made. Can I use that for interpreting law? Answer is no. Because after an act is passed, after it goes through the House of Parliament only, marginal notes are there, are added by the person who is publishing it. So marginal notes are just for reference. It cannot be used for interpretation. It's not even part of the act. Next, definition sections. In definition, we have 2 types of sections, guys. What are the 2 types of definition sections we have? Which is ambiguous sections and definition, subject to a contrary context. Ambiguous, it's confusing when you read it alone. So when it's confusing, try to read with the entire act. So interpret it along with the other provisions of the act, then you will get the meaning. Sir, what is definition subject to contrary context? Based on where you are using it, the meaning will change. Based on which context you are using, the meaning will slightly change. Okay. This is definition. Illustration. Sometimes act itself will have some example. Simple. Can I use illustration to understand the provision? Yes. Can illustration widen the scope? No. Can illustration override the section? No. Proviso. Proviso is basically exception. Proviso is in an act. You know what is proviso? Follow this except for these people. But exception and proviso are different. There's small line of difference. I can't explain that in 1 minute, guys. We will see that in the regular. Explanation. Sometimes within the act, there will be explanation. For example, private placement. Maximum number of people I can give private placement is 200 people. Now, is it 200 for equity, 200 for debentures, 200 for depositor, or all put together 200? So each security it is 200. That is given an explanation. So explanation is for you to understand the law better. But can it widen the scope of section? No. It cannot narrow down, it cannot widen down. Can it override section? No. Schedules, like how Companies Act have schedules. CSR, there is a schedule for CSR, Schedule 7. Schedule is part of the act. It will again, it cannot override the act. It will help you in understanding the law better. Read the act as a whole. This I already told you. Harmonious construction. Don't read just inter-syllabus until I am expert in Companies Act. You need to read the whole Companies Act. Next, external aids. They are saying to read and understand the law better. Try to understand the history why the law was made. Nirbhaya Act came after a huge movement in India. That's why the punishment itself was changed. For juveniles will be hanged in an event of all those crimes. So understand history. Why GST came to allow for cross input tax credit between goods and service. You will understand GST better. Consolidating previous statutes and laws. Sometimes previous statutes will be consolidated into one statute. Classic example GST, VAT, service tax, excise. All three were consolidated and what we got? GST. Next, usage. What is usage, sir? What people are actually following is different from the law. But as public, we have accepted that. So that will override the law. Are you following, guys? Are you following? Clear? So law is saying something, but public is not following that. As trade usage, public is following something else. Everybody accepted that, then that only becomes the law over the act. Are you following? Yes, court also will tell. Palavarshama idamma pannitrukom. Okay. Earlier law and later law. Okay. Now, if there are two laws, let's say Contract Act 1872 and Partnership Act, Sale of Goods Act or Partnership Act 1930-32. Two acts are conflicting. Which act will override which act? The later act will override previous act. Are you following, guys? If let's say regarding a contract, Sale of Goods Act is saying X, Contract Act is saying Y, I will definitely follow X because the later act knew about the earlier provision and still made this provision. So later will override the previous. Are you all with me, guys? Clear? Dictionary definitions. Sir, can I take Oxford Dictionary for understanding some term meaning? They are saying to understand the definition, first go to section 2 of the act. Go to section 2 of the act. In section 2 definitions there are follow. So section 2 definition is not there. Then to understand the general meaning of the term, you can go to the act. Financial year is defined. Financial is not defined. So what is financial? Go to general definition and take the dictionary definition. Are you following, guys? Next, outside our law. Sir, can I use foreign case law for understanding Indian law? Solomon versus Solomon. Foreign case law, you are using it. So they are saying, first see for a particular issue if there's a case in India. If it's there means you follow that. If it's not there, then you go for foreign country and use the case of a country which is following. The term they use is similar jurisprudence. India democracy, UK democracy. Yes, India democracy, UK, China communist. I can't take a Chinese case law. Similar judicial system, jurisprudence now we can follow. Are you following, guys? With this internal and external is also done. Now lastly, interpretation of deeds and document. Under interpretation of deeds and documents, we have three sub-rules. Golden rule one irukku, elementary rule one irukku, conflict resolution one thing is there. Okay. What is golden rule? For example, let's say in an agreement, I wrote rupees 50,000 only. But when I wrote the amount 50,000, I put one extra zero. Sir, first of all, what is interpretation of deeds? So far, whatever we saw is interpretation of act. Is interpretation of act, guys. Interpretation of act. Okay. Interpretation of deeds, na rental agreement. Let's say rental agreement or let's say any lease agreement, those kind of deeds. So here, let's say I told rent is 50,000 only, but amount I wrote 50,000 with one extra zero. Which one to follow? Within the agreement, there's conflict. The court is saying, give importance to the technical expertise and circumstance where the draft is made. Who is the person who drafted this? It is a junior person. Mistakes are normal, so it's okay. They are saying golden rule enna solrana, give importance to the logic and solran. He's saying give importance to the logic. Look at this. In golden rule, what he's saying, read the document as a whole, circumstance where the word is used, and training of the parties drafting it. So, if it's 50 rupees 50,000 and 10 is put, when you read the whole document as a whole, you will understand for 1 or 2 BHK, 50k only is rent. I can't give more by 5 lakhs. Are you following? Second, elementary rule. One word will have the same meaning. Elementary, basic. Don't confuse things. All words will have the same meaning, guys. Don't confuse us. The word plant and machinery will have the same meaning throughout the agreement unless the context compels a different adoption. For example, the plant near the plant and machinery, now meaning is different. Are you following, guys? Okay, the plant is tree, or the poo-30 near the plant and machinery. Are you getting it? So generally, if a word is used in document, give it the same meaning throughout the document unless the context is something else. Last one, conflict resolution. Simple. Within a document, if there is conflict, if there is fight in life, usually what we do, we try to resolve it. Here also they're saying you try your best to resolve the conflict in solran. If you are not able to resolve, then earlier will prevail over later. In act, later will prevail over earlier. Here, what will prevail over this, sir? Earlier will prevail over later. Sir, what do you mean, sir? Within a document, PVR movie ticket, first page they told water bottle allowed. Second page they told water bottle not allowed in theater. Which I will do? Water bottle allowed. What is written first will be followed over what is written later. That is for within the same document. But if it's in case of act, so simple, if I have to summarize, in case of act, later will override former act. But in case of deed, what will happen? Former will override later. Are you following, guys? And then in this same interpretation of deeds, you have to look at some Latin terms. If I just show you those Latin terms, here we go, guys. So what are the Latin terms? What we already know. I'm not going to tell the terms, but look at this. Fine. If you see something like absolute, absolute one is not clear. What is there only I'm going to follow. So absolute na literal construction. Keep in mind. Maggie is coming, sir. Because nowadays they're asking this. Maggie is coming. See, look, here also Maggie, here also Maggie. Maggie is reasonable construction. Are you following? Absolute means clear, that means literal. Maggie vanda reasonable construction. Lastly, generalia something. Genelia, actress Genelia comes means harmonious construction. She's in harmony with everybody. Just know Sachin movie also re-release. So think of Genelia comes na harmonious construction. Okay. He acted in all movies, Telugu, Tamil, Hindi. So harmonious. Okay. Then last one, say some consude is coming. Consude, contemporary, expositor. Con. Are you following, guys? That's it. Remember, like this, Latin terms come now. You know what are the terms, what are the concepts. With this, we are done with what, guys? Quick GenZ revision in about less than 20 minutes for interpretation of statutes. This is clear, guys. Fine. That's about it.